Good morning. All right, January 25th. Going to be streaming stock market. Work. Morning, Tree to Leaf. Thank you for patiently waiting. What's up? Morning, Indy. All right, let me. There it is. Okay. No, I actually didn't end up selling my calls. I was in the restroom towards end of day, and I just was like, you know what, I'm gonna keep them. So yeah, it looks like I'll probably dump them today, unfortunately. One more day, but I might get about the same fill, honestly, if we do get a little pop, just because that morning pop, and they weren't weeklies, they were next week, so definitely theta decay, but not as bad as if they were weeklies. There we go. Cold in Mexico? Come on. I exceeded my new accounts trades for the period. What does that mean? Pretty big sell-off. SPY down 1% from Microsoft. I think that's the only reason, only news, more or less. So potentially confirming this rejection of this line. We'll see though. Did break above it, but I think today and I'll be below it. And yesterday did end up giving us a divergence, actually, after all. So, yep, it's looking bearish. Okay. Yeah, so I don't know about GME. Seems like it can't make its move with a market like this, but sure. Oh, we're talking about pattern day trade rules. Yeah, 3-day trades a week or something. What do I think SPY's doing? I mean, it's right at that resistance, so. And we have earnings, and first big one was Microsoft, which I didn't even look at it, but I'm assuming it wasn't very good, at least as guidance goes. Where is the VWAP? Why does it say? Oh, it's daily. Oh, that's why it looked weird. I got rid of all my drawings. That's good. I like it clean. Get some support and resistances here. Yeah, that basically just flipped that high. Move that to this high right here. I might look for a short entry today. On SPY or on a ES, but yeah. Gonna flush through. We're back at these levels over here. Yeah, I think so. So huge round trip. A short back here worked great, and then Apex random rally, and then now we're coming back down. And of course, most of the move most likely happened in extended hours. GME down almost 4%. That's ugly. BBBY still up 2.5. It did have a pretty good pre-market. HLBZ getting dropped on. Mergers happening usually. That's buying the dips. Paper trade and rich, baby. Where it starts, it's good. It's good to paper trade. Low volume is, yeah, it's strange. It was just bad guidance. Yeah. INBS and Flux. Yeah, someone was mentioning INBS yesterday. Let me take a look at little pre-market movers, top gainers, the pre-market. BAOS. What? Oh no, that's 5 minutes. There. Bayer, Snoa, like pharmaceutical, biotech. Oh, this is the one that was talked about before. GMBL. That was the one I couldn't think of. That's when we saw eBet and stuff running. Yeah, one of you guys in chat mentioned this yesterday or 2 days ago. Got a nice gap up on it. And then, I don't know if, yep, eBet's up 7.7. These are getting sympathy probably. I don't know what the news is, but yeah, so that is, I don't recognize anything on this market. So sometimes I've just looked at pre-market movers and then just drawn some support and resistances, and if it's broken that pre-market high, just gone long for like some scalp day trading. It works pretty well. Market's about to open. Yeah, okay, and I need to probably dump those calls. I might hold on to what I'm gonna do with shares.
All right.
See if I can not squashed on, I bet. Okay. Markets open by flushing. BY looks good. We'll see. I mean, definitely outpacing. GME is dumping here at open. SQQQ. Yeah, it's probably a good time to be long on SQQQ. I don't know where you entered it, but Cosm's up. OEV. Flushing. Hey, David. Distraction stick. Oh. 5.5% on GME. Buy. Jesus, calls Paul's lost another 30%. My hopes for a pop in the morning. I'll wait for it though. It'll come. Yep. Like we're gonna be retesting that 15-ish. Maybe new lows. I don't know. The volume never came in. We had this one Monday volume and that was it. Was that Monday or was that Friday? Friday. Not sure if, yeah. BBY just flushed it open. I'm gonna wait for a bounce and try and grab some cover calls and stuff. This is an ugly open. Jeez. What's your type of money? Dude. Everything's dumping. BBBY from, wow. Yeah, yesterday goes up 10% and then down 10% all the time. Yeah, I don't like this divergence. Spy's got it also. A little more subtle on Spy. Or maybe it's a bear trap, we just rally all day. This candle's turning green now. Wow. Cosmo. Breaking that pre-market high. Okay, Spy's coming back down now. Look at that candle. This is ugly. Tech companies have laid off more than 60,000 employees in the last year. So I guess Australia's CPI numbers came in and they were higher. That might be part of the sell-off. think that's on here. Oh yeah, this was interesting. About 32% of institutional investors with 11 trillion in total assets consider their portfolio overallocated in real estate in 2022, up from 8.7%. That's a huge increase. Erase all these drawings. I'm really excited. Good to hear, Tree Leaf. Just kind of looking for an exit on these calls in GME, then I'll figure out what to do with those shares. BBY, I don't have to, just rolling short puts forever. Oh, I do want to do covered calls today though. So yeah, looking for a bounce on everything to open and close positions. Getting a bounce here on SPY. ECB's Maclauf says would not like to speculate on how high ECB interest rates will go, but he also says it's working. Weekly mortgage demand jumps 7% as interest rates drop to the lowest level since September. Hydrating. Some of the main traders are just whacked. Not really watched. My watch list doesn't have hardly anything up that much today. The highest on my watch list is GoEV. Happened to Cosmo. Oh, it's giving it up. And AT&T is high. It's high on my watch list. So, do they have earnings or just crazy rotation to value? Yeah. Okay. So that earnings beat. Yep. Tech down, value up. What the heck? Oh, this is one of the ones that did that thing yesterday. The market's rallying here. That's pretty aggressive, Lex. 14. Did you wake up to buy the GNS shares? Held up pretty well. Better than HLBZ. I might like to get back into HLBZ. Spies filling that gap some. BBBY still down. So I was reading some of your guys' chat in Discord talking about the vested shares and that they took it in cash and not in shares. Kind of interesting. OEV still going up. Okay. Buy the dip. Yeah, it has bounced off the support. There you go. Coming up a little bit. Pin this message. I don't mean to come chat on Discord right now, but if you haven't joined our Discord, there it is. Thank you guys for your likes. Appreciate those. Got 11 of them. And this bounce is pretty crappy. I put a limit order to sell those calls pretty high, so I think it did hit there this morning though. Maybe it'll hit there again. Yeah. HLBZ, I don't know, maybe like 30 cents. I'd like it back here. Oh. Okay. Might get some long puts on GME actually. On a bounce also. Morning, Saleh. Are we dumping? I think market moved a lot on Microsoft, bad guidance. And then Australia, I think their CPI was higher. Make this short on the legs. GNS, yeah, up a little bit. Okay, I actually did sell. Close those calls. Took a stupid loss on them. I bought them at a bad time. I know better than that. Too hype on a Tuesday. That should be the name of my band. Now I'm gonna wait to get long puts. I mean, everything's oversold, so we'll probably get a pretty good bounce. Like, maybe shouldn't have sold those calls yet, but okay. Okay, still have the shares. I can do some covered calls on those, probably. Yeah, I can. Okay, cool. Yeah, if I don't have open futures contracts, I can sell covered calls on GME. So might do some of that today. Carl's dirty fingers all over it. HLBZ flushing through the supports. Back to the pre-market level. Oh yeah, that 32 was that price I was saying is kind of what it hit in the pre-market. The market is just weak still. I'm gonna order for some covered calls. Suppose I should do some on BBBY. Although BBY is definitely stronger to me. The wicks. Oh man, this is weak. I'm gonna leave my order there. We should get a bounce to get it filled. Don't really want to be shorting it into the lows. Oh yeah, I can't close these out on here. That's why I haven't been doing it. Dang it. Um, Sell or hold? What are we selling or holding? Should be a bounce somewhere in the market today, I think. Might be a nice long. $135 million idea. Stock gifting app. Market maker, market maker. Make me a market. A PayPal for stocks? Yeah, that's an interesting thought. Eyes flushing now. Well, I got out of my calls, but I didn't get any short positions. I still have all those bears. Wow, SPY really just flushed there. AMC is holding up better than GME. Oh my gosh. Look at that move. That's a big move. Let's see. Ugly. Stock jokes for sure. Um, that gas doing? Oh man, SPY's flushing. Whew. GME 7%. Oh man, this is crazy. All right, I'd say a rejection on that trend line is confirmed. Hmm. 8% on GME. BBBY is, yeah, it's holding up better. Down row. Broke the market. Microsoft. Gabe Plotkin was the finest investor of his generation. I'm not sure about a merger, Wayne. I heard the speculation on the vested shares and that they took him as cash instead of shares. It's, to me, that's just logical, as taking them as shares right now is less money than if you took it as cash. So I wouldn't speculate that that means a merger, but it could. It could. Good. I like the speculation. It was 12% from yesterday. Yeah, I don't think a merger between GME and BBY necessarily. They're trying to get out of more retail and into more e-commerce. Yeah, the Friday rally. Yep, we're back to where back almost to the lows on Friday. I mean, the market's weak, down 1.5%. Not bouncing even. Little bounce here. Bank of Canada raised rates 25 basis points, which is what expectations were. Not sure if we're getting a bounce from that or halted. Heard a lot didn't meet requirements for halting. I know yeah, it did seem like that was a little bit of a foresight into what's coming, I guess. Um I don't know. I have no idea, but yeah, stuff like that definitely. I mean, yesterday it even scared the market when it halted. Like when stuff was halted, the supply was coming down. I mean, not quite like this, but you could tell there was uncertainty. So, but yeah, that could be could be a sign of a top of sorts. Bit of a flash crash. Nice, Lex. Just getting aggressive. 31.75. You still holding your GNS? Thing flipped, huh? Wasn't broken that support. Just shoot around a foot of snow. What? BBBY. Oh yeah, I forgot even what my title was. Well, I liked the hourly chart here with that inverse head and shoulders. Then we got a bullish MACD and green over the 9, so that all looked good yesterday. Today we'll see if we get an engulfing candle here. Might that inverse head and shoulders might not play out, but this is a good support that we've held so far on it from back here. And with how bad the market's flushing, BBY is not doing quite that bad, I would say. Just normal daily volatility on it. If you compare it to something like GME that is really feeling the heat of the weight of the market coming down. So yeah, I'm more bullish, I'd say, on BBY than GME at this point for a shorter term move. Because I don't know, I'm totally blind on GME now. This seems totally tethered to the market, and market's not doing well. See what happens on GameStop when it gets down to this 19, kind of these levels from right here. If we get a bounce there or break through that, then probably back to its lows. Not yet, but it will. Geez, a cover call is going to sell this morning. I've already lost 50% of their value. Maybe I should buy him now. Okay. Okay. BBY hold until at least 310. There's a bounce there. Bounce there on the market. Dollar's been coming down. GME is not moving up. 500 heat map looks like a crime scene today. Yeah, price action been crazy since, yeah, I guess the OPEX kind of started it. Those are 21 puts. Nice. Get the cattle prod, Jeremiah. Nice. Yep. Yeah, I could have gotten some closer to the money puts. The hedge. Yeah. Consolidation, slightly bearish, seeming like this sort of area. So I think eventually though, probably retest our 15 level, maybe even make it down past that. We'll see. But I mean, MACD's still bullish. We still have momentum is still up. It's just crazy chop right here. But the time frames that I was hoping for, it seems like GME's broken. It really looked like we're repeating this, but this bottom has been quite a bit different. And still no move up, so might not be repeating anything. GME got no bounce on that. My bounce. I don't know what to do here. I don't know if I should hold shares to cover calls, close shares, cash secured puts, close shares, just sit. Hmm. Buying Wish. Yeah, I saw that one moving up yesterday. Yeah, if it holds that support. %12 bounce tomorrow, huh? That's pretty precise. See if I can watch. Yeah, no, I know, I get that. I'm just, I guess, not trying to trade. I'm trying to close positions potentially. I don't want to sit back if this thing is just going to decay necessarily. Like, just dump to new lows because that's the thing. It dealt with OPEX on Monday. Not Monday. Monday was. Wait. Oh, this was. Hmm. That's nothing though. That's not. That was just OPEX, I guess. It wasn't this cycle rally that. Yeah. Yeah, I'll wait on the shares. And new lows on GameStop, 8.3%, and in such a hurry this morning. Not even been an hour. What are those levels back here? 1944. Wonder if we'll bounce off of that. Yeah, that's that big level. 1944. Hmm. I'd be bullish if we bounced on that, I would say. I got 1 million shares. Yeah, they were down. Yep, there they are. With this high borrow fee. HTGM. Curvana. Yeah, it could be bouncing on the bottom of that flag support. Yeah, I wanted Either go along there or wait to see if it starts to bounce off of that. Those look good. Yeah. Little bottoming candle here on GME maybe. Said yesterday felt like our Monday red. Said yesterday felt like our Monday red. Yeah, I do. $17.75. Your price target on, huh, Lex? Are you basing this on fractals or bib levels or what? Feels more suitable. Yeah, had the momentum of the market to easily push it down, and lack of volume, but the day is still very young. It hasn't been an hour, so who knows? I might fill this whole gap today. Same with GME. Volume. See, I like to see good volume. Yeah, today is actually good volume. It's better than yesterday, at least. Yeah, actually, today's a lot of volume. All right, I'm not doing covered calls. I don't know. I might, if we get a good bounce, I'll do covered calls, but at least get rid of the order so I can wait. Technical and emotional. Yeah, this 1944 level is pretty big though. But run went from Yeah, I don't have my run position anymore. Yeah, I like to run. Um, I never put it in my long term, so I ended up just selling it, I think. Oh, it's Thursday. Yeah, I mean, there's this divergence on SPY. It's subtle, but it's there. It's like there was back here. Just wondering if this is the start of something like this. Yeah, I'm trying to be patient, but I think entering a short at some point today. Try and hold. GME bounce, not flushing anymore. Just not dumping. Look at that trend. I like how the potential bankrupt stock is holding up some of the best of any of them. Great. Jamie Dimon of JP Morgan says we should never question the credit worthiness of the United States government. That is just part of the financial structure of the world. That is not something you should play games with at all. I don't know what that's a reference to. Carl Icon. There's some BBBY hype from Bullions. Oh, we'll just do it like that. The other item is that all these RSUs were forfeited in place of a cash payout for power of attorney sometime. Whoa, that's big. Get a headache. Power of attorney. Sometime in all cash transactions, RSUs can be negotiated to an early vesting to get cash payment, and that is always released when the acquisition is announced. Never before, like we just saw. Think of this as similar to how options are viewed in the treasury method with a set price. So if we had a set price for a buyout in a cash transaction, no early payout needed. But if there is a cash and stock transaction, there would need to be a set share count at a given date in exchange for shares. The RSUs will be excluded. So my guess is the acquirer has agreed to a majority stock trade, and the board member who left has a position in the stock of the acquirer, and therefore left before finding out if it would have been an all stock or all cash transaction. Boom, enjoy your new shares, and more than likely a squeeze, as this is leaning heavily towards a majority stock deal. No further evidence is the market didn't react after hours if it's a stock deal. Regardless of price, the value is predicated on the acquirer's balance sheet, so it's impossible for the markets to say good or bad. What was there news after hours? What was after hours news he was expecting? These guys are loading up on BBBY shares. That was talking about BBBY. It's a bit of speculation, I think, but yeah, we don't know yet. Could be an M&A, and we don't know what the price would be if it was. Another post I said oh, at $20, but I'm like, I don't know. I just kind of consolidating in this low. GME moving up a little bit here. BBBY also. There's the SPY. GNS down 8%. 18% for HLBZ. Yeah, that was kind of the level I was saying. Might be a nice buy. Old side especially. Might have better buying opportunities though. Possible all stock deal rather than all cash. Oh, that's what that's saying. GME coming up to VWAP, but that is very low. SPY's VWAP is really strange. What's up with this? I'm moving back down. New low on SPY. I'm eating a little food here. Weird that BBBY is inversing. SPY is flushing through that support. GME's not really feeling it either. 393. Where in the world's that from? 100 hours. No idea. And there goes SPY.
A high near 29 up here, and a low near 22 to be watching going forward. And this symmetrical triangle type pattern, you're looking for a breakout in either direction beyond these white lines. So to the downside, that could certainly put the $22 level in play. To the upside, we'd be looking more around here, the 29 to 30 level. That would be our 252-day exponential moving average, roughly in confluence with that upper trend line there. RSI not really giving us a lot of clues here. It's mostly just following the price action, but we're still a good bit away from the oversold area.
Okay, so it's not trending downward to register those oversold technicals. But this kind of triangle wedge situation has plenty of bearish components to it. But there's some bullish components as well if we can bounce here. So the stock basically needs to bounce to kind of hold this wedge it's in and give bulls a chance. Otherwise, we've got some major breakage. And like the price target highlighted, way up there. So they're definitely looking for a reversal in the opposite direction. Let's talk another negative note out. In this case, some cuts in booking. And many of the analysts who cover reopen stocks, leisure and hospitality, Renita, have told me over the last 6 months this is the best play to take market share from competitors. They see it as being an advertising powerhouse. This morning, there's quite a bit of negativity in this.
It is a little bit negativity, but if you keep going in, it's a little bit of positivity as well.
Okay.
Reminder that Booking owns Booking.com, Kayak, rentalcars.com, so it covers a wide spectrum of the travel industry. And so while Booking Holdings was taken from Gordon Haskett, pardon me, from a buy to a hold, they actually boosted the price target from $22.50 to $27.00. And Gordon Haskett says that the Asia recovery is starting to trend pretty well with this company. And so although this Booking stock, it has outperformed its peers, however, the firm does say that comps will get a little bit tougher in the second quarter. And now they see less of a valuation upside.
Okay.
And so that's looking at the 2024 estimates. Now, a lot of the 2024 estimates were a little bit higher relative to where the company itself even saw. But we did see analysts weighing in, other analysts. UBS yesterday boosted the price target from $2,200 to $27.85, but maintained a buy rating.
Okay.
Barclays boosted the price target from $24.30 to $25.50, maintaining overweight. And then Bank of America, however, downgraded it from a buy to a neutral and raised the price target from $22.50 to $27.00.
Wow, okay, a lot going on here.
It's a lot.
For Booking without any earnings, without any major kind of headlines here, apart from travel numbers from the holiday season and from China starting to pick up. I mean, the thing's been ripping, so I guess everybody felt like they had to weigh in. Rick, this is a pretty impressive run we've been on.
Yeah, there's a lot going on in this chart, too. The price target of 2,700 is about 14% appreciation to the upside, and that matches it up with those yearly highs over there near you, Oliver, looking like they're expecting another run back up to that level.
Okay.
So in the more recent term, narrow, steep channel trending upward here. And remember, the more steep a rise or decline is, the less sustainable it is. It's not something that can keep going forever.
Okay.
And it seems
Never
like...
heard of Bitcoin, Rick?
Well, I mean, that's had some ups and downs, to say the least. But 23.75, we topped out back here and here, and that's around where
I don't know if
we
Icon did
were
anything.
topping out on Monday as well. Monday we
don't know
we
what
rose above
Xander
it. It
was
was
talking
looking like
about.
we might have a breakout. Tuesday's price action brought us a doji though, where we opened and closed at roughly the same point. That usually suggests a stall in trend. Broke down a little bit today, but up significantly since the open, right back to that, right around that 2373, 2375 levels here. So if we do break down further, look to the 21-day EMA right here near 2231. That could be a point of support. But the momentum seems to be favoring the bulls still. We're in the overbought area on the RSI here. Very slight bearish divergence as price was trending up, but RSI was trending sideways to down slightly. But you know, still, it's looking like the moving averages are trending upwards still. So it's seeming like
RSI divergence. Shout out.
Bulls here.
All right. Well, this is the doji here, the little red
Never heard
one there?
those guys mention that.
So it would look like this, basically, like almost like a little cross. You know, the open and close happens almost at the same level. So it's you know, it's not really indicative that a trend is strong or continuing.
All right, interesting. The doji. So you do know crypto. All right. Okay, let's talk one more here. The positive note out, and for that we get some pizza.
Absolutely, you got to bring in the pizza, right? Because who wants to go out and get food when you can just have pizza delivered?
Correct.
And that's
GNS.
pretty much what made Papa John's stock pop over the past couple of years. Now, today we do see an analyst note initiating it at a buy rating and $103 price target for Bank of America.
I got rid of my calls.
This analyst says that
I was going through last night
demand for
and
pizza's been fundamentally unchanged because
I don't know,
although
something
the
in me, I
past
was
2
like,
years have been pretty above average,
just
above
thought maybe
normal, that
we'd get the
right
morning
now the softer demand for
pre-market
pizza
move.
is really just normalization. And so that's why she
But,
said
yeah, I
that
did dump 'em.
the company, or Bank of America rather, does believe that Papa John's comps are going to return to a more steady state, and that'll be in the low to mid-single digit range.
Maybe finding a bottom finally.
Also saying that Papa
the
John's
day.
is less penetrated in some of the most popular areas, which shows that it has room for growth.
Never seen one.
And is expecting,
They don't have
get
them in
this,
Mexico.
more than 2,000 stores that it could open in its top 5 emerging markets
There it is.
internationally.
Wow, that's a lot of papa.
That's a lot of pizza, a lot of Papa.
Shaq's going to have to get some travel in, it sounds like, going promote
Yeah.
around the world. You know, this thing is a really interesting chart because the point about the deceleration
Yeah, I think
from the, you know,
Shaq owns
COVID
part of it.
order-in paradigm, the normalization, this analyst calls it. We got some downside of the stock, but then
I know, yeah.
now it's like gone sideways for months.
Let's hear
I mean,
about
this is
your
really-
real
you don't see
estate
this a lot,
portfolio
do you, Rick?
up in
Yeah,
the
we
States.
were tightening within a trend line, a
you know, Austin.
triangle pattern here.
Yeah, I
And
don't know
even
where they
tighter
are.
Still, we've compressed then into about an
They're, like,
8-point range between
concentrated
88
in
and
one part of the
88.
States.
So almost this serpentine pattern kind of winding back and forth here.
Oh, I've seen them in Colorado.
Now we have to look for a breakout in either direction
I don't
because
know where
we're
else I've
getting
seen 'em.
close
They
to
might be
the
West Coast.
apex of this pattern. To the downside, we've got the 80 level, and that's the confluence of
Look
this
at that
trend
range.
line plus the lows from this range. That could be an important point to watch if we are able to break through those 2 shorter-term moving averages to the downside. To the upside, we've got the confluence of the 252 EMA and our range highs near 88. So kind of got two rather weighty things both to the upside and the downside to choose from here. Price target about 21% to the upside, so they're still favoring some appreciation here, looking for a breakout beyond this long-term trend, which looks decidedly sideways. All these moving averages just kind of, you know, trending straight across here.
Yeah, bizarre.
Help is nice
RSI
bounce on
not
that
really,
resistance.
RSI reflecting this rather, kind of showing that there's not much directional conviction one way or the
Walmart
other,
isn't
just
just
kind
New
of
York?
bouncing around the midline.
Yeah, fascinating to see just kind of perfectly sideways pattern.
Margins
However,
don't-
Chartmaster, dare I say, you missed a few
Don't
things here
allow
with
for
the
them to
triangle.
have such expensive real
And,
estate,
Rico,
maybe.
we have a piece of pizza now. All right, it's pepperoni. All right,
There
thank
you go.
Appreciate it, guys.
I don't know. That's
Papa
weird. I didn't know that about
John's,
Walmart.
up and with a little time left to make a decision where the stock goes. Thanks, Rita. Thanks, Rick.
GME
Let's talk
breaking
some more earnings,
VWAP.
Get an update on a consumer staple when we come
They might be our
back.
big day. Who
And
knows?
it's time for our
10:30,
Market's still down. Nothing's really changed there.
1.1 million. Yeah, I mean, increasing volume is good. Small boat gas? Is that ENSC? Is that Biostock? Yeah, Biosciences. $2.8 million. Already done 30 million. Oh, another reverse split. That's weird, all that volume. Without a lot more price action. Am I getting into it? Yeah. BBBY wants to go green today. Unusual volume on the BBBY calls. What we got here? $13,052 for the Feb 1710 calls. Huh. Count me in. Not the bounce. Not the bounce the market getting yet. Just a slow grind down. What's the notational value on those calls? That's really the only thing that matters to me. That's 10. Not seeing the volume there. Take calls. Oh, so never mind. It's 1,300, not 13,000. That's not that unusual, is it? I guess for this expiration, that is unusual. So, oh, and they're at the ask too. That's what triggers those. I feel like, I mean the volume, but especially if it's at the ask. Nice tight spread. What? Only $20,000? Yeah, that's doesn't mean anything.
aspect of their business is they even talked about the personal computing side of their business, the OEM operating system business. PC sales are down. Hardware sales were down significantly,
was I muted?
Including their
I don't know.
division, which sells Surface laptops.
I was just looking at that
Overall, the Azure
options
cloud
volume
business is decelerating in
on
terms of
BBBY.
growth. That's something we should expect. But once again, it looks like when the conference call came out, they were a little bit more dire in terms of their outlook for the remainder of the year, and we actually see it now trading lower, and I think it's dragging down the rest of the market. But at the same time, I thought this was perhaps even starting on Monday, kind of a bull trap that we've been in, because if you look at the long-term trend going back to last January, we keep hitting that ceiling. There's a long-term downward trend line that the stock market, at least on the broad market, the S&P keeps hitting. And this is, again, another situation going back to December where we broke above the 200-day moving average as a false breakout, and it seems to be breaking back below that. So that, to me, still shows signs of at least near-term bearishness.
All right. Scott, what stands out to you from the earnings overnight and this morning?
Well, obviously, what George just talked about is extremely important. But, something else that I'm seeing, and it's not just from the earnings, but, we're seeing so many layoffs in tech. We're starting to see some of this. I think there's been over 50,000 layoffs just in tech over the last month or so. And, Microsoft obviously announced earlier this week that they had 10,000 jobs that they were going to cut. And you couple that, or combine that rather, with all of the others that have been kind of putting this out. This is sort of the scenario, I believe, that the FOMC and the economy and the market in general has kind of been looking to. We have some data coming out throughout the week this week that's going to be important for investors and traders to be paying attention to. But I believe that among all of that, this is one of those things, Oliver, that we really should be paying
Tesla's
attention
earnings
to
today?
as well.
Wow.
Okay.
I haven't even looked at the earnings calendar.
Important point. So there's a lot here to focus on. We got to kind of
I don't know.
choose our battles.
I don't know what expectations are or anything.
Earnings focused, but we do have.
Seems like the market's reacting the most to guidance,
GDP, of course,
more so than anything.
durable goods, inflation Friday, can't lose sight of these
Microsoft's were pretty much
However,
pretty close to expectations,
Tesla
I think.
Tonight, perhaps
But their guidance was
the most important
pretty bad.
near-term event. George,
So-
is this still the leader of this market?
Well, I don't know, OJ. I don't necessarily think so, because one of the things, it is for the beginning of the year. Yeah, a lot of these technology names have done extremely well. But I think the overall good sign about the S&P 500, I'm not saying it's going to go higher or lower tomorrow, but it shows breadth that's improving, because if you notice a group of these large cap stocks, they haven't been performing all that well, but the S&P has been holding ground. So that tells me that we're actually seeing accumulation and breadth that is improving in the overall market. Now that's positive, but nonetheless, you got to consider some of the dire earnings outlooks for a lot of these mega cap companies. Tesla, again, they're cutting prices, which I think is a great strategy for the business. But I think their production capacity is overwhelming. They have too much production capacity. They're cutting prices to increase production, to increase, of course, the barriers to competition. But again, some of the macro data
what does it say when you try and trade them?
Move off
Fidelity.
the stock-specific issues. Just look at the PMI numbers yesterday. 2 consecutive months of contraction, below 50 on the index. That's not necessarily a good thing. So the lagging indicators don't necessarily look good. Again, labor markets are still relatively healthy, but as Scott alluded to, lots of layoff in the tech space.
This move right here just looks very similar to this move that we had.
As a percentage of our total economy.
And that was also that divergence.
Companies are all about getting more out of less. So, I'm not surprised to see the layoffs happen there first, but we start to see it manifest more so the financial services sector and the industrial space, then we have to be a little bit more concerned about
shoulder on the shoulder ahead.
When you look at the big picture, Scott, next 2 days here, what role does that play when we think about the economic data and our fear about recession?
Well, I think that we're going to be getting some economic data that will help.
You can chat with Fidelity, I think, can't you?
Dial in or hone in on where we are exactly along that line. Now, I know that that's a movable target and it's moving all the time.
When are you trying to buy that?
But, we're going to have
GNS
data released, for example, on Thursday, tomorrow.
GNS.
GDP. It'll be, it's predicted that the major of economic growth has declined 2.6% in the last 3 months of 2022. Prior to the quarter, the prior quarterly,
You'd have another
that was
brokerage.
3.2%. So as we start seeing
Have
these
a
things
backup.
come down, the GDP, among many others, we're looking at a lot of important data this week, but that's going to be one of the big ones I think that we should be paying attention to as well, Oliver.
For sure. All right, all nice preview into inflation on Friday. Thanks, Scott and George, for the thoughts.
SPY's moving up here.
Trading 360 with Nicole Petalides is up next.
So is GME. Sell-off was so quick. Didn't have time to get any positioning, so we'll see. GME didn't quite hit that 1940, but it got close. 1955. Maybe that support won't mean much anymore now that we've broken it. Broke it here also. Might I recommend Robinhood? Robinhood's not bad. I don't have a problem. All the Apex Clearinghouse stocks shut off the buy button. There's like 12 brokerages I think that did. But yeah, I mean, you just have to accept commission free isn't really commission free with really any of them, because you're paying for it and paying for order flow and slippage, and they're making their money. But the UI on Robinhood is pretty appealing. Missed a step. There you go. Gotta talk to chat. Kind of GME. I know, but a lot of them shut it off. How did it screw you? Because you were trying to buy it when it was at 450? Or it screwed you because that's what stopped it from rallying more? Uh-oh, Ace. You're getting called out on your Walmart stats. You're going to lose credibility. People are going to stop thinking you're really a Mexican, too. Those little bodies. My phone's ready to go all night and watched it. I mean, they might have saved you too, because they very well could have shut it down another way instead of just the buy button. Yeah, that's true with any brokerage. If you're on margin, they can lend out your shares. If you have cash, they're not supposed to. Your cash account, but potentially they still are. Kind of yacht. Is it still going? It's like no bounce can really get any legs yet. EU closes in 30 minutes. CEO of Ripple said that the SEC agency has been embarrassing this legal battle. Oh, this was interesting about the oil reserves. Showing you guys. I think I was eating though, so I couldn't talk. Crude oil in the U.S. Strategic Petroleum Reserve was unchanged over the past week, bringing to an end a streak of 71 consecutive weekly declines. Reserves are currently at their lowest level since 1983 after a record 37% decline last year. GME is breaking through that VWAP. Now BBBY is not as strong. Elba is still kind of playing the inverse game. SEC votes to propose new conflicts rule for asset-backed securities traders. GME on the up. Top gainers last 5 minutes. Let's see. These sketchy, weird ones.
Pushback since that deal was announced. They did report their cloud revenue did total about $21 billion. This was up from a year ago and did actually narrowly top analyst forecasts. Azure grew about 31% specifically, outpacing forecasts slightly, but obviously seeing a negative reaction to these results. Still up about 10% off their yearly lows, but now lower for the year and down about 26% off their yearly high.
I don't know if it did wonders for it.
All right, thank you for that.
I think it definitely brought in a bunch of
a lot of outperforms and buys, but as you said,
people into the market. So if more individual investors is good, then they did a great thing.
Right, and this name I think is one of the most important names.
Yeah, I mean it maybe brought their commissions down some, but again, the free commission free, you're paying for it in other ways.
Fourth quarter delivery figures back at the beginning
of
January.
Payment for order flow.
405,000. This did exceed forecast, but then for
so
the
it's
year
not,
put them slightly behind.
And just the bad fills, like
50% year-over-year growth with delivery.
You're most likely paying more for commission free.
Strong growth. Now, naturally, I
brokerage, well, Robinhood,
we're seeing analysts update their coverage today
for the bad fills
lower its price target
than you would for one that you're actually paying commissions on trades
with an overweight rating, also
and getting good fills.
Top pick in the space, which then replaced Fryer Battery. The analysts at EVs passing from acute undersupply
yeah, I mean,
to
of course
potential
the UI on Robinhood is nice and the simplicity is nice.
Cuts are just the latest sign of EV market.
That's I think
that it may be
big thing that got individuals into investing was just
did lower its price target to 120 from 125.
The barrier of entry seems so much easier with that.
Stanley at 220, but they do believe Tesla's aggressive price cuts could help catalyze and accelerate what may have otherwise been a modest or proactive pricing normalization process. This analyst said that price cuts are a positive for the consumer, negative for Tesla, and negative for other automakers, and potentially positive for some of their parts suppliers. So sees a bit of a mixed picture following them, reducing some of their model costs by as much as 20%. So all eyes will be on Tesla, of course, today. Their earnings call is always an interesting one. It feels like they can somehow always reverse the move that we see post earnings, but we will be waiting and seeing. Will be an interesting report, as it always is, Nicole.
Thank you so much, Jenny Horn. A great look at two very key names today. Really appreciate it. Great reporting on both those names. Thank you. Let's get some insights on the news shaping the markets, and for that we welcome in Sam Stovall, Chief Investment Strategist.
I don't know if I've heard an earnings call from Tesla.
Good morning to you, sir. Thanks for being here. So, you know, we started to feel like things were going great.
Yeah,
right?
it
Even
did
saw
increase
market
competition.
breadth, improve on Friday. In your notes, I saw that.
But
earnings season's
how much?
underway and the pressure's back on.
How much are
What
you
are
actually
thinking
paying
here?
less with those other ones?
Well, hey, Nicole, good to talk to you again as always.
Maybe
yeah,
you're not
I think
seeing
investors are focusing right now
what you're paying
on the
for
earnings
slippage
picture.
and
They're going to wait to panic regarding the
fills.
Fed, or at least get optimistic.
You know,
if
they
the
can
Fed
make their
does
money
what
somewhere else,
we
I'm
think
saying.
it's going to do. But right now, you know, the focus, as you said, is on Microsoft, Texas Instruments, Tesla coming up, et cetera. So it's these behemoth companies that are reporting earnings. And it looks as if the fourth quarter of 2022 will be the start of a 3-quarter earnings decline and therefore an earnings recession. And I think that will end up coinciding with what will ultimately be regarded as an economic recession. The only question being, how deep will it be? So right now, earnings are expected to be off about 3.5%. This is compared with the 2.9% decline anticipated at the end of the year. But along with it, we're looking at weaker revenue growth as well as shrinking profit margins.
Understood. I mean, so basically earnings weakness and then recession that sort of goes along with it, but just how bad will it be? That really does not paint a beautiful picture for stocks. So it sounds like 2023 is going to be choppy or worse at that.
Well, I call it a tale of two halves. First half, I think, is going to be choppy, as you just described, because earnings are going to be in the red. Also, the Fed, we think, will hike by 25 basis points at the end of next week's meeting, but then go on pause until the end of the year. And so investors are still in a bit of disagreement as to whether they
it's still
think
pretty
the
good
Fed
this first
will raise
hour.
rates in March as well, or even continue to do so into the second quarter of 2023. So a lot of uncertainty as to the Fed, as to corporate profits, the depth of the recession, et cetera. But a lot of those negatives, I think, have already built into equity prices. So the question is, when will investors start to look across the valley at the potential for rate cuts as well as an improvement in corporate profits?
Yeah, understood. So with all this worry out there, the year-to-date declines that we've seen, at least in part, what are you watching?
Well, I'm watching what I think is a rotation that is going from from first to worst, if you will, meaning I am going from those sectors that were the best performers in 2022 and gravitating toward the worst performers, such as communications services, consumer discretionary, tech, real estate. And you are showing a graphic where I talked about how investors don't need to panic should the S&P, the Dow fall into a year-to-date decline mode, because that has basically happened in 92% of all years since World War II. We normally end up in some sort of a period when the market is lower than where it entered the year. However, what we typically find is that if the year-to-date low is set before August 31st, we have a 90% chance of an up year. So we could still have a year-to-date low take place in August, but history says, don't worry, that still gives us enough time to post a positive result for the entire year.
Wow, frequency. So if it's before August 31st, that's a good sign. Very interesting. At this point now, so maybe things aren't as bad as we think they are then. You know, you're talking about some of the U.S. automakers, you're talking about some of the subsectors. Go back to that. I'd like to hear more about that.
BBY is the
Well,
number one
consumer
ticker with
discretionary
unusual
was one of the
activity
worst
on the
performing
options market.
categories in 2022.
Average of
Obviously, because
209%
it was a
out of the money.
relatively high PE group,
Leading indicator of market
also
movement.
with interest rates rising, then there would be PE contraction likely for these growth groups. Also, they had done so well, and let's face it, Tesla really is the behemoth within the autos category, and therefore within consumer discretionary. Ditto for Amazon, which is not a tech company, but rather a consumer discretionary company by our definition. So when you have these very large growth-oriented companies that had done exceptionally well, investors look to take profits whenever the market itself is experiencing weakness. But it comes a point when things tend to be overdone, and we then look for opportunities. What you're looking at right now
It's moving back up. See what happens at VWAP.
a chart showing the auto group and the rolling 12-month
EU
relative
closes
strength
in
for the
17
S&P
minutes or so.
auto category. And obviously it is showing that this group is now halfway between -1 and -2 standard deviations. So I guess in reverse of the old Milwaukee beer commercial, it just doesn't get any worse than this. So as a result, if you are a longer term oriented investor, you might want to start thinking about nibbling at these auto stocks.
I see. So it's not necessarily run for the hills or anything. What's your final advice to investors? You know, obviously there are some opportunities.
Oh, sure. Well, I guess I'm sort of a Pollyanna at heart. When life gives me lemons, I make whiskey sours. And so basically I tell investors, remember, you are long-term oriented. Following decline years, we've had 21 of them since World War II. Instead of gaining 9%, the market rose by more than 14%.
Oh, John Parker, don't give me hope.
71% of the time for all years since World War II. Following down years, we were up more than 80% of the time.
No, MLK was last week.
Usually you want to take advantage
well, I don't think it's pushed back.
Slips and falls within the market.
Understood. Samuel, well, wonderful to see you.
But I haven't read.
So much. Thanks for being on with us. Happy New Year, my friend.
Happy New
Great
Year.
one ahead for you.
I haven't read or heard anything about it being pushed back a day or deferred or whatever.
Plenty more to come right here on Trading 360. Our 360 Spotlight looks at the
GME
health of the
has
US
made
housing
moves at the end of
market.
months.
Dolly
So
and Jenny Lenz will be with us. Our
So
disruptor is Hess. The energy name
there's still a chance. I think I have lost some confidence from yesterday or after yesterday, but MLK, that was last Monday, right? So I don't know how to have any effect. But if so, if it was pushed back a day, then they would have until tomorrow pre-market for the bell.
Whether you're an experienced investor
I
or
think,
just getting started,
because that's what they had until today before the bell.
Looking to improve your portfolio management skills? Our portfolio management
But I'm not just
series breaks down.
I'm not just looking for like a little
like
OPEX move because I don't even know if the option
income
chain was that
generation,
stacked.
ETFs, and more.
I'm trying to more track this
You can ask
these
questions by
swaps
chatting
rollover
with an education coach.
or whatever happens
It's
is
interactive learning at its
every
finest.
few months or
Tune in
so,
live or
which
watch on demand.
seems to correlate also with
Head over to
OPEX moves, or maybe
tdameritrade.com/webcast
OPEX gets it started. I'm not sure,
learning
but
today.
yeah, that's kind of what I'm. Because potentially all of our OPEX was covered on Monday. That's why we had a pretty big green Monday. So there's not much pressure on the options chain, and it's not gonna matter. Yeah, 16% bottom and top. It was weird price action. It was like just melting up. Yeah, strange.
Welcome back to Trading 360. I'm Nicole Petalides live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3
I closed my calls. I still have all my swing shares. The chart is still bullish.
Great to see you both. Thanks
But it does
for
have this
being here.
divergence,
So,
which
Don, first up, bearish on Netflix
might
today.
signify
Tell us
a
little bit
reversal.
about your thoughts here.
Yeah, as you know, we're getting back on the bear train, so enjoy this one, Nicole. So I'm going to start with Netflix. First and foremost, why a bearish move that I would be anticipating in
Some
here.
people just look so
we're
weird
in
on
kind of
camera.
a post-earnings, almost like hangover,
Maybe
if you will, to
maybe
the
it's like their
upside, and it is
camera
rather
settings,
dramatic.
like beautify or something. I don't
I would
know.
expect that that's going to fade.
That looks
but
like he's like
in
a
addition
future,
to it, you've got deteriorating,
like
economic
a future
environment.
species.
Subscription services like something in Netflix here is
BBBY?
probably going to feel the pinch of that. I'm going to go a little further out in time on this particular trade.
Holding
all the way out
holding
to
that level.
March
Still have that inverted head and shoulders here on the hourly.
Buying a 345 put. Again, buying a 345
bullish on that shorter
put,
term.
selling a 335 put. It's done for a $3 debit. That is an out of the money.
Holding up pretty good. I mean, pre-market of course was a rally,
it's a very
but
controlled shot to the downside. A $3 debit on a $10 wide spread. Again, anticipating that Netflix may not roll over necessarily tomorrow per se. It may not roll over a week from now. But again, with the deteriorating conditions, you can see that volatility monster in the marketplace just keeps coming back, and that's what I would anticipate for the near future. I think a bearish position is well suited here inside of Netflix.
Understood. Ben, what are you thinking here when you take a look at the Netflix chart?
Damien Hirst shark. He does look like a shark.
Nicole, I like the picture Don painted in terms of the fundamentals.
I'm
not sure the technicals support that yet. I'll show you what I mean when we're talking the daily time frame. But first and foremost, we've got a well-defined trend off the lows that we saw end of December, beginning of January. That was around 273, 275, all the way up to 365. And here you can see again, bottom left corner that is to top right corner. And this is a textbook example where we can see along the way a few very well-defined areas of consolidation separated by that vertical type price activity that we look for. And this is what we try and find when we're looking for a trend, right? You want to see when it's well-defined like this.
Yeah, buy right now.
No rejection of, as we're currently forming this balance area around 360. So looking at price activity through the lens of auction market theory, principles, and concepts, basically states that we're in one of two phases of development. And most oftentimes in the horizontal phase, right? But kind of stacking these horizontal phases up sort of helps us determine trend. Here you can see the move that we just looked at. We're talking about off the end of last year lows up has been, well, somewhat
I think it
trend,
probably could have a big move up still, but I like this one maybe for a long term, so that's why it'd be fine to
162. Now, these auction market theory principles and concepts help us not only identify trend, but also when we're kind of losing trend. In this instance,
you do have that potential for
we haven't
a squeeze
necessarily
up
invalidated
the next
yet the
month
working
or two,
assumption
probably.
we're trending lower. The last time we looked at this stock, we identified 4 areas of value to the downside, and then I pointed out this 5th area that's forming. Not what the bears wanted to see, right? This is somewhat bullish. So again, this is where it's not necessarily supportive of what Don was talking about. Now, true invalidation comes as we take out the middle of balance area number 3. That's really yet to happen. We're talking up around 400. So we could roll over here. If we do, then we're just forming a larger area consolidation. We're talking below this 365 area, up above 162. But again, that's anyone's guess at this point. I think earnings are going to be key over the next couple days for some of these tech names.
Here, GME doing
Netflix here, breaking above the 50-day moving average. RSI supportive of this move up that we've seen. The 200-day a little bit more reflective of that longer-term trend.
I think GME might be broken.
Kind of on a downward trajectory here, but
again,
definitely this rally we've seen as of recent has legs.
Yep.
Not necessarily a thing I want to get into in front of in terms of short term, but here you can see on the long term that trend remains intact to the downside.
Right, understood, and that's a great chart really showing us that trend. Don, what do you make of it? What do you think?
Yeah, no, on this one, a much more fundamental. I mean, look, deteriorating economic conditions is really going to take precedence here. I think we're going to have a lot of companies not only laying off and continuing to lay off. I mean, we're through the first round of layoffs, but again, subscription services like Netflix are going to feel some pain here in the near term as people look to cut back.
Jimmy, what are you doing?
Netflix
is it one of those days?
One of them on the docket there.
Is it going to be huge candle?
All right, next up. We have NVIDIA at 188. I mean, we're already
the volume is not bad
on tech and semis. Your thoughts here on NVIDIA?
All right, here's one other one, wildly bearish on NVIDIA. And the trade that I'm actually building here is just to define risk, looking for a quick pullback. But
It's
why
moving
do I
up here
state that? Why
too.
do I state like wildly, bearish on NVIDIA? And it's not often that I would come out and say that, but simply put, has anything really changed fundamentally, or even technically for that matter, since the beginning of the year? What we basically have are tech stocks that have been beaten down and bludgeoned in, of course, 2022. Right now, NVIDIA year to date, it's up over 30%. It's just a wild bid back. I mean, this is that kind of quintessential, what we term rip your face off rally, more. But stocks like NVIDIA have been driving the order flow back to the S&Ps. This is what it has ultimately become. It's a handful of still mega market cap stocks, NVIDIA being one of them. Anyway, I'm looking for a very near-term pullback on here, even prior to the earnings announcement. The trade I'm going to do in NVIDIA is the February 17th expiration. I'm going to be buying the 190 put, selling the 187.50 put. Now, it's just a 250 wide spread wrapped around where the stock is presently trading. It's what we term an in-out spread. One strike in the money, one strike out of the money. So again, 190
I like this guy's plays. They're
selling the 187
pretty
half
simple.
puts. Trade's done for about $1.20 debit. All we need is just kind of a brisk move to the downside, achieve some profitability here and pull the trade off.
Right, understood. And you said you're really
Let's all
bearish
retire in
here, and
2023.
it's understandable because the pressure has been on. Ben, what are you thinking?
Well, I think if we fail at this level that we're testing right now, we could see a reversal. The stock's overdone it to the upside relative to the broader market, taking out the DC highs recently back to spring highs from last year. But first and foremost, another perfect example of a trend environment to the upside.
Very similar to Netflix.
Much like we just looked at in terms of the move as far as Netflix. You can see, again, well-defined trend environment. Bottom left corner to top right corner, 138 all the way up to 195. And I want to point out, in this instance, we actually take a closer look at that bottom left corner, because here you can see we established a bit of a triple bottom over there. You can see how, again, this 138 level was key. And I just want to point out the support that we found there. That was an area of consolidation that formed. Well, let's take a look at the areas of consolidation here as well, because you can see one formed around 140, 157. And again, in a staircase type fashion, a pattern that presents a very well-defined trend to the upside. You can see consolidating right now around this 181 level, just below recent highs of around 195. Now, I want to show you what's going on in terms of the daily time frame, because here you can see another instance where we have a bit of a counter trend move. This move up we just looked at, but I mentioned this is a key level to keep an eye on. If we fail here, Don could be right. We could be in for some big movement to the downside here if we start to roll over. But first and foremost, trend environment to the downside, so kind of in line with what I was talking about in terms of Netflix. Nothing to really invalidate the working assumption that we're seeing areas of value form at lower and lower levels. Again, this rally, not what the bulls wanted to see necessarily, but look at what's going on here. This is very much contained for the most part still. I mentioned taking out the DC highs, so that gets us a little bit ahead of where the broader market is, back up and through highs from earlier this summer to levels we haven't seen since last spring. But this is a key area. If we start to roll over here, if we fail, if the broader market, if some of these big tech names that are reporting quarterly results fail, again, we could work our way back through the middle of this range, retest the lower extreme. Notice how the middle of the range in the most recent test held here. So that's significant, and that's supported the move to the upside. Let's take one more step away from these daily candles and check in on the day 50 and the 200-day moving average. Are above both the short and the longer dated. RSI a little bit less enthusiastic to the upside than what the bulls would like to see. It's not really taking out highs to the same conviction you'd like to see, but this is a key area here right now, no matter how you slice it, in a pivotal time for the broader market as well, with all this focus on tech shares. Keep an eye on 200 when you're talking NVIDIA here. A big area right now in the daily time frame. You can see that going all the way back to last spring.
Yeah, and I'm glad you pointed out the areas to watch here as we have those moving averages. Don, final thought. I mean, are you feeling this way about most of the names in the group?
Absolutely. I mean, when you're looking at the overall marketplace, and specifically, let's talk about tech for just a moment. Like, do we really see like green shoots? Like, is this going to be the beginning, if you will, of a bull market? Or does it make a lot more sense? We just went through, again, a very tumultuous year in 2022. There's some rather extreme volatility. And ultimately, we're seeing a bid back. It's just a kind of, again, as I said, a rally back, and a relief rally to a degree. That makes far more sense, because when you start looking at it, as I said, like green shoots, and we're starting starting to have a momentum to the upside. I just don't buy into it. I don't buy into it at all. And again, today is proof with volatility starting to reemerge.
Right. Okay. Then let's turn our attention over to something completely different. You're looking at silver, the iShares Trust, the SLV. Where do you stand there?
Well, first, Nicole, I got to make you excited about being a bear on those other products over here. It's okay to be a bear. It's just short duration option trades. All right.
Okay.
We'll switch over to silver. So metals didn't perform like I would have anticipated in 2022. We just haven't had a lot of upside potential in them, and it's predominantly been because of the stronger dollar. Well, the weakness in the dollar, I think, really opens up the door for metals, specifically in this case SLV, for some fairly extreme upside potential. As such, I'm going to take a very measured shot. Again, I love to use defined risk spreads. Spreads are going to mitigate my volatility exposure.
Amen.
In this case, I'm jumping all the way out to the April 21 expiration. So why so far out in time? Because ultimately, I don't necessarily think I'm going to be right tomorrow. I can't actually feel the breakdown per se of the dollar just yet. It's been holding that 102 level. Nevertheless, I think it's opportunistic this year as conditions, again, economic conditions, I've said it 3 times, they're deteriorating. So I'm going to look out to the April 21st. I'm going to buy the 22 call, sell the 26 call. It's done for about a 90-cent debit. Nice defined risk upside shot inside of silver.
You're making good trades, Ace.
All right. Look how
Well
he's trying to balance us out, Ben. Your thoughts?
He teed it up perfectly.
Did
for
you
me,
did
Nicole.
you get into that
This is
penny stock?
A name ETF right now that we're talking about, SLV, that
GNS.
has been on the move higher. It's almost a perfect mix of the two stocks that we were just looking at on the daily time frame. But let's start with the hourly. Here you can see the move off the mid-October lows. We're talking around 16.17 up to 22.50. Nothing major here, although that is a big move in SLV. Again, you can see a small on the relative scale, $5 to the upside. But I wanted to point out a couple things here. First and foremost, you can see a very good example here of what we've been talking about, right? These two phases of development.
Nice.
And I think that's what's important. If your viewers can take nothing away from these charts that I talk about, it's to be able to identify the markets in either a vertical phase or a horizontal phase, and then to be able to base your expectations thereof, determine trend, and all those other things we talk about. But here you can see most recently forming this value area around 22, right? You can also see a well-defined trend playing out, but kind of more rotational and overlapping recently since the middle to end of December, beginning of January, right? 22.50 to the upside, 21 to the downside. Let's move away from the 60-minute time frame, taking a look at the daily in terms of where things stand. And this is where things get kind of interesting, a mix of the two stocks we took a look at earlier. I was talking about how this kind of principles, these theories, help us identify trend, but they also help us identify when trend's no longer present. We need to be able to do both as traders, right? Here you can see well-defined trend to the downside from 24.90 all the way to 16.19, the lows that we saw this September. And as I show you this, you're going to see some well-defined areas of consolidation, right? That's how we determine trend up or down. We're talking 1, 2, 3. And I actually could have drawn one small one right here. It was short-lived, but that would have made 4 areas of consolidation that formed on the way down here. And then look what started to happen here. Remember, we were talking about the two names earlier, how we had seen, again, in the instance of, well, we were talking about Netflix, right? Not what the bears wanted to see. We were talking about taking out key areas of structure. In this instance, we took out the middle of 2, forming this small area, which again, I didn't highlight. I wanted to just focus on the bigger areas, and we've actually started to build some momentum to the upside, so I can understand Don's bullish nature. Now we're kind of hanging out in the middle of this range here, which we got to get through to retest the upper extreme. But lastly, I wanted to point out, Don mentioned the U.S. dollar. In the middle of the range that we established last year, it's actually now kind of through the lower portion of that middle range, below 104. Last year, the dollar was 94 up to 115. It's now back below 104, around 102. Look at where we are in SLV. Last year, from 25 roughly down to 16, kind of right back in the middle of that range as well. Shows the well-defined inverse correlation that Don's talking about in terms of some of these commodities and the U.S. dollar. I think the dollar should be watched relative to some of the other foreign currencies, the tail wagging the dog, it seems like, as of recent. But this is going to be a reflection of what we see in terms of the greenback, again, to the middle of the range we established last year. Silver, SLV, that is, in a very similar situation. So is gold, so is a couple of the other products that we talk about.
Yeah, I took a short up here. We'll see.
Both a great big three today. Always a lot of fun when we're all together. I really appreciate it. Don Kaufman, co-founder of Theo Trade, and Ben Lichtenstein, thank you always for a look at the charts. Big three. Thank you both. Coming up next, our spotlight, the real estate market. The experts are here. Dolly Lenz, Jenny Lenz. What's going on in housing? They can give us all the details. They join me right here at the desk at the New York Stock Exchange next.
Bum, bum, bum. Yeah, I'd be curious what you find out short term versus long on your cap gains. All right. GME is trying to crawl out of the mud.
Really quiet. And you have to kind of really research.
Why just sitting up there at VWAP?
Reports, it's hard to tell, but this year Goldman Sachs just came out. I think they
I'm thinking
about 6% of their workforce.
this right here, like this.
A lot of the tech names, since 2008, right? And even if you didn't get fired per se,
For some reason, Webull keeps deleting that trend line.
Not confident, and
They don't want me to see it.
Always say is a confidence play, so that is going to further decrease transaction volume, as I said.
I mean, you can't just hang up your shoes, right?
Right.
I mean, you've been doing this for a couple of decades plus. You know, the billionaire broker, because you've had all these incredible sales over the years.
So,
what do you do? What do you tell folks? Because
Tesla earnings will probably move the market, but
right. So that's the problem too, right? Rents are high, so you have to weather this storm, but there's really no way.
Next buy wants to maybe fill the gap
at the moment,
which is why a lot of millennials are moving back.
Breaks that high, like right at it right now.
Because they really, if they're going to save up to buy a home, how are they doing it? You know, if you look at New York City, you know, a one bedroom is $3, $4, $5, $6, $7, $9,000 a month.
Yeah.
How can you save money? You can't.
It's crazy, and nobody's getting paid. I mean, it's hard to make that
Next
kind
looks
of
really
money
nice,
too.
actually.
I mean, to bring in that kind of money. I mean, unless you have family wealth, it's pretty tough to bring that in. In the meantime, you know, are there bright spots, right? You noted that, look, we're off the highs on the mortgage rates. You had the confidence of the home builders seem to tick up a little bit. I mean, they've had a lot of time getting labor, the materials.
Right.
I mean, they've had a lot of costs too,
issues,
right?
Exactly. Yeah, but I think we're optimistic that the end of 2022 is the end of the hugest part of the problem.
Right.
Right? Both with interest rates ticking down a little bit, right? And people saying, okay, now this is behind us. Prices have started to go down, especially where they went way up, right? So you look at Phoenix, you know, or you look at Austin. These prices are way down from the high. And that's good. So that's going to make people come back in. It's going to trickle in,
GME is
and I
like
think we're
just
going to have a bad
mirroring
year
SPY though, just melting up.
but a good year otherwise.
Right, sellers are reluctant to sell also, given that they were getting all these high prices, right? Getting all these high prices earlier last year, and now things are kind of sitting. So it's
only down
a
1.5% now.
to, you know, when they're willing to lower prices and when buyers are willing to jump in.
You must have had a lot of fun when it was really hot, right? And people were coming in with cash, and they were battling it out, and you know, moving the prices to the upside, right? I mean, that wasn't that long ago,
right? Especially in Florida, it was absolute craziness.
Yeah,
I mean, when does that come back? Sorry,
things have doubled or tripled, really,
literally,
in everywhere in Florida, right? Which is frankly not sustainable,
right?
To the point again of to low transaction volume, but I don't think that's going to happen in the near term.
No, I don't think so. I don't think we're going to see that again for a while, and it's really going to be interest rate driven.
Right.
So if interest rates go back to 3.5, right, then I think people will be euphoric, and maybe that's the whole plan: raise it so we can lower it and make people euphoric.
Well, there is some plan to maybe cut back at some point, right? I mean, there are a lot of people who are betting that the Fed will raise and then sort of pause and then even pivot. That being said, I mean, what are the stars doing? You always have your finger on the pulse of the stars. I mean, you sold your
I think I'm going to close out of some of my GME shares here.
Way back when, that was a $57 million triplex. The West Village Mansion, $45 million. You have a lot of biggies under your belt.
They're all doing what they've always done, so I don't feel like living in Montecito. I am moving back to Los Angeles. You know, fortunately, they are able to do what pleases them today. We see them hold back a little bit, though, because in the general malaise, right, they're feeling poorer, even though they're very wealthy. And again, like Jenny said, confidence wins.
Yeah, and you made the point of your home price. It has been so elevated, it's probably not sustainable. It's probably going to come back down maybe a little bit. That being said, just the final
actually sold all of them.
I was talking with someone who
other than my long-term ones.
He was talking about the fluctuation in mortgages, but that
and
if
these
you
I'm
have
going to do
a
credit calls
jumbo
on. Let's see.
loan, you get a better price. Is there something to that?
I mean, you do get a better price, but it's not that much better. So at the end of the day, when you're wrapping it into the monthly cost, which everybody has to have a budget, right, in monthly costs, I mean, you can save your electric bill, maybe.
Right. Yeah, and it matters for everyone, right? Even our wealthiest clients, they also take mortgages. Might be after the fact, but now they're not going to want to buy as much as they did before, given that if mortgage rates are 6% and they make 7% on their money, 8%, it's not as big of a spread as before.
BBY, I'm more hesitant to do covered calls on.
3 or 4%.
But you made the point. They sometimes will make the adjustments later. So
well, my BBY shares are in an account. I can't close them same day, so.
No, the final piece of advice I
GMEs
think
I
is
could
also real
close if I wanted to today. Might scalp them, we'll see.
Slashing, right?
Yeah,
they're down 2/3, some 80%.
Probably won't lose much value though
those
today.
Are be good buys now.
Already 11:45.
Right? Real estate related stocks because they're really trashed. So now we're seeing optimism in that market, the real estate related stock market. So the Compasses, the Douglas Ellimans, the Anywheres. And I think given that we're at the New York Stock Exchange, that's good news.
Yeah, this is the financial capital of the world. I love this building so much. When we think about commercial real estate, are folks going to come back into the city? I mean, you do still see people buying, but just not at the same rate. You won't see the transaction volume. I mean, what are your thoughts on New York City?
I think in terms of commercial real estate, that's far off in the future if it comes back at all. I'm not sure. I'm not a bettor on commercial.
Cosmo.
Long-term leases are
Cosmo breaking out.
You might see a bloodbath.
Yes. Yeah.
Breaking that high from
Florida still the hot spot?
Yesterday.
It is, definitely. Yeah, new buildings being built every minute.
Yeah.
Yeah.
Yeah, better weather.
Yeah.
So nice
Chart
to
looks
see
nice
you
also.
both. Dolly Lens and Jenny Lens of Dolly Lens Real Estate.
Yeah,
Thank you both
Cosmo or
for
HLBZ might be a good trade.
the picture of a tough year
Or
ahead.
not HLBZ, but what are we looking at? Oh, NEG. I might pick up some NEG actually.
Thank you. Coming up next, the disruptors. George Sills is standing by. He's going to take a look at Hess for us, the energy stock touching all-time highs today. He'll explain next.
I don't know. I don't know if I should be bullish on these. My market outlook's bearish. Just chill. Chill on it. It's a good thing you didn't go long on him then. BOC's Macklem says it is far too early to be talking about interest rate cuts. U.S. arms exports up 11% to $153 billion in fiscal 2022. State Department official says. Union memberships in the U.S. dropped to the lowest since the federal government began collecting such data in 1983. Tesla will keep blowing our minds despite Elon Musk's distractions. Shareholder Tencent has said. Macklem says it's not going to feel good when the economy stalls, but do we need this period of no growth? But we do need this period of no growth. The exposure to stocks by professional fund managers already is near the lowest level on record, according to Bank of America. Suez Canal revenue hit record highs of $8 billion in 2022. Yeah, with cost of shipping, right? Part of the cost is going to that canal. All the traffic. Using stop losses. Yeah. It's definitely good if you can't watch it or manage it. It can get you into trouble, but maybe saves you more than it gets you into trouble. For me, it's more, I like it because it it reduces my reduces my likelihood of emotionally trading, like closing or opening. I can just take that out of it and just put a stop and just let it go. When sold and ripped, yep. I mean, it's more beneficial just for the emotional, to take the emotions out of it. Because when it's at that price, you know, I might not want to pull the trigger. So. So this hourly candle is engulfing, just barely. We'll see. I'm not holding too much weight on that candle. We do get a bounce some from Tesla earnings. I still see this as being the top. Oh, that's 402, I guess, the 400 level more or less.
Which on gross margins of about 67% or close to 20% on a net income basis. I mean, we're talking technology level net income margins for an oil and gas company, which has been increasing its free cash flow pretty significantly, and it's starting to manifest quite nicely into a share price that has exceeded its respective peers.
Yeah, and when you think about the peers, I mean, are you surprised to see Hess doing as well as it is after you looked at these numbers closely?
So I think it's doing better than its other domestic peers like Pioneer Drilling.
Let's move up a little bit here, see if it makes a new high.
It has a lot of international exposure. So when you have domestic exposure and an international exposure, I think overall the weaker dollar from production and sales overseas is manifesting into better earnings per share for the company, and it might actually manifest better EBITDA margins on a forward basis for this company specifically versus its competitors. I think the operational and E&P based relationship that Hess has with Exxon is very accretive to its business, and even the forward EBITDA growth is actually double its net income margin for the last 4 quarters. They're still expecting about 40% EBITDA growth going forward, and that is on top of about 31% sales growth. So they actually see sales growth moderating, and that's to be expected because if anything comparing this year to last is going to demonstrate an outsized move because oil prices were pretty aggressive. But the stocks have reflected that in terms of price action and price return from an equity standpoint. But the forward EBITDA growth is still above the top line sales growth for Hess, and I think the weaker dollar
what do you know?
is going to help their
Max Pain on GME is
business
2050
quite well. So it's an interesting company. I think it's a
there's the pop on SPY. New high, breaking out, filling the gap.
Its earnings profile. And it's been rewarding shareholders all year. Like I said, over 70% has been a fantastic mover. And it's not just a run-of-the-mill, oil and gas drilling company that's a high flyer or that comes and goes. This is a company that's well established.
All right, thank
you.
No
news, just a technical break.
Appreciate it. George Sill, it's great to see you.
Looks like it.
Good luck there at Hess for us.
Could have waited on my short, but wanted to stick with the plan. Had a range, this was a high, so probably just end up riding this thing for a bit now.
AT&T's jumping about 5% right now. We'll dive into these names coming up next on Trading 360.
If this holds, this could be a good long though for a short term move back to what, 397 and then 398, 399 and on up to the gap fill. Yeah, it's moving. GME's not getting the love from it. Whoa, look at that thing. Is that their news? GME's no movement from that. Neither is BBBY. That's a pretty big candle there. That is always the risk, shorting once it's already down 1%. But this seems like news related or something. Yeah, this GME down takes the chat out of you. And BBBY. Unilever CEO, we've passed the peak of inflation, but not the peak of prices. That's deep. Oh, EU close. Yeah, EU closed at 11:30 though. But I think their post-market closed at like 11:45. Yeah, it was a weird rip there. Yeah, I don't know. Not seeing any news. Just a bit of a technological pop. Party City's up 16% and rallying 20%. And SPY broke that level. So 399 next, probably. If it breaks this. 398, 399. Just getting so choppy up at these highs. Bit of chop. Shake people out, and then the direction. Direction might not really come until data like CPI, I think. What do we have next? See here. Wow, the SPY is still ripping. So 26 tomorrow, initial jobless claims. That could move it. Durable goods. It's all pre-market. New home sales, 10 o'clock. And Friday, PCE, core PCE. So this stuff could move it. the next 2 days. See if it rejects here. What did I look at next week? ISM in manufacturing on Wednesday next week. Nothing on Monday. Tuesday. Consumer confidence. More home stuff. Jay Powell speaks on Wednesday next week at the FOMC. What is that? I think Wednesday next week might get some movement. Fed funds rate. Initial jobless claims on Thursday. Unemployment. Yep, next week. It might just be kind of a little range bound till then. Market is so data driven right now. This bear market. So that's it. When bull market? We're not data dependent. I don't know. We might just be in a bear market until after the bear market. We might not be in a bull market. It could just be stagnant. You know, if you look at like this range, this didn't really necessarily have a direction. It was going up and then it had a big sell off, and these are weekly candles. Then it made a new high, but then it made a new low, and then, you know, just kind of staying flat, kind of like here too, just range bound. This was a year right here, a whole year. So that might be our next year. We could already be starting to get into this, but I think we'll probably see new lows first. I haven't really seen anything that looks like a bottom, and of course, raising interest rates is signifying that we're not at a bottom either. So a true bull market, yeah, it might be a couple years. You know, like this, where you end of 2008. So this was a bull market. The ranges, man, the volatility in the range has been crazy last year. It's actually interesting to look how long it's actually gone on. There's a whole year of that. So much more volatility than prior bear markets. Look at those weekly candles. So if it comes down, if I comes down to like 362 and holds that support, then maybe it could start to look like a bottom. But I'm thinking we probably hit at least the pre-market or pre-COVID highs. And maybe much lower. U.S. sending 31 Abrams tanks to Ukraine. Lawmakers seek tighter oversight of farmland bought by China. Other countries. Following DeSantis' lead. Market's kind of rejecting. Keep using the shot of Boeing. It is a cool shot. Big planes with that wide angle looks sick. Oh, this is their little media package. I like airport photography. So, I'd like to do cash secured puts on GME, but I think I will wait to open them. My covered calls are up 1%. I have something green. It's glorious. Not 3%.
part to note. I will say, you know, I was taking a look at the headlines. I haven't seen a lot of analysts' commentary about this. The majority still have a buy rating on Boeing, so still bullish on Boeing. So despite this surprise loss, haven't seen any downgrades because of it. So I guess that could be seen as good news too, plus the fact that it's already off earlier lows, only down about 1% right now. Of course, we still have a few hours left in the trading day. Anything can happen, but not as bad as I initially thought it would be, you know, upon seeing that first headline.
In both names, really.
Yeah.
Boeing and Microsoft.
Yeah, definitely off those lows. And they've got that robust travel demand remains there. So we'll continue to watch this.
Demand is back.
Yeah, demand is back. I can't wait to get on a plane. All right, thanks, Caroline.
I can't wait to get on a
Senior
plane.
Markets correspondent here on the network, helping us break down Boeing post earnings. But now let's bring in Nick Theodore.
Hardy's now top on my watch
Risk
list.
Management Director at TD Ameritrade. Nick, I wanted to get your take. NASDAQ struggling for that fourth week of positive in a row. Earnings season coming in below historical norms. We're at a beat rate with nearly 20% of the S&P 500 reported so far. We're at a beat rate just under 70%, but at the same time, that's below Q4 historicals. It's about 79% beat rate. Is this what investors should be focused on, that, hey, these companies are guiding lower and there's a lot of uncertainty on these conference calls, just like in Microsoft's, and that should be what investors and traders should be following, is that, hey, if they're uncertain about this year moving forward, shouldn't you as an investor or trader?
Yeah, Tom, I think that's a really great point. And, you know, these beat rates are even a little bit understated, in my opinion, because, you know, we're typically beat right about 80%. We're you know, 10% off of that. But remember that so many of these estimates have already been lowered. Guidance has been lowered. You know, ratings by analysts have already been lowered. So, you know, what you're hoping for is sort of that lower bar, and then to really jump over it. And when these companies aren't doing that, when they're just
Thank you guys for your likes. I appreciate it. 27 of them.
Targets,
Legit.
You're seeing it really, really hard for them to rally. You know, and I think the scarier part to me, and just sort of the sentiment right now, is that it's really industry agnostic. We're hearing it from Microsoft. We're hearing it from Boeing. So you think about sort of software, you know, massive global software producer, massive global hardware producer. All these industries are basically just citing this uncertainty. And I think what's fascinating about it to me is I've been thinking a lot about these earnings relative to the pandemic. It doesn't feel like a fast bounce back here, right? We saw the pandemic and people were like, well, maybe the economy will never turn back on. And we sort of got discounted because of that. But markets rebounded very, very quickly when we saw that demand would be there. I think what you're really seeing now is a concern that the consumer just isn't going to be able to shoulder all this, right? And the consumer very broadly, right? Businesses aren't investing, you know, paychecks are likely
Still a lot more volume than yesterday.
And ultimately, that's going to take dollars out of people's pockets. And I don't mean to be Mr.
Doesn't look like it from price action.
Mr. Happy Day Hinks will offset me here, but you know, it's a tough situation when you think about really taking money out of the consumer's pocket. And I think these CEOs are, you know, incredibly smart, and they have a very good handle on their book, but they don't know, right? They don't know how far it's going to go.
You're such a contrarian.
And ultimately,
umbilical cord.
if we go just a little too far, you know, people are
Thanks,
saying,
Tenzin.
I can't afford to jump on that plane. I can't afford.
You know, you can make money on the longs also.
And you're seeing that come through in a lot of these conference calls, which is where we're getting that volatility. And the VIX is only being at 1980, and then I'll shut up, guys. But 1980, with all this uncertainty, I think it's a fascinating story with volatility right now that just isn't reflecting kind of the uncertainty that we're seeing in a lot of these names.
Yeah, if this market rallies back to unchanged by the end of the day, Kev, because
it'll ruin Tom's week.
Not at all. Not at all. I thought that 200-day moving average in the S&P 500 was going to hold. We actually dipped below it. It's about you know, the 62 level as far as 38, 33. Wait, what is it? 39.62 is a 200-day moving average. We dipped below it. We're bouncing off it. We talked about having some confirmation above that, you know, resistance level that we've had since last January's high. If we continue to rally, you know, even with this gloomy outlook, I mean, you look at some of the names that are down. Norfolk Southern after their earnings, Kimberly-Clark. We saw 3M yesterday. AT&T actually doing well. I mean, give me your take here about what we're seeing in this earnings season that should give us clarity moving forward, because I'm not seeing it myself. I want some clarity for these markets to kind of consolidate, maybe rebound a little bit, but I don't have a reason yet.
It's a heavy lift hanging out with you two. I'm just going to say that right off the bat. But here's what it is. We're early in earnings season. So the comebacks here in Boeing, the comebacks here in Microsoft, they're a pretty good story. But tonight we've got a bunch of new ones coming out. And guess what? Every day you're going to get earnings, and then you're going to get an outlook for the U.S. economy going forward. And so every day you're going to get hit with those body blows that the expectations going forward are not great, right? Microsoft did it. Boeing talked about, even though both of these today had good stories, they both warned. They both warned of problems, right? They each have significant issues. So it's just a matter of how many body blows this market can take before it turns negative, because you're going to get more and more high-profile names coming up. Remember, Microsoft was the first mega cap tech to come out. There's more close on the horizon.
Yeah, and I sometimes look at Norfolk Southern's down about 5% today. It's a rail carrier, right? And then we had
you sound like you should be an option seller.
That, sold off from
umbilical
highs yesterday a little bit. I look at those logistic companies as a good barometer for the health of the overall economy, maybe some consumer strength in that part. Nick, do you look for outliers in this market where, hey, if we're weak in logistics and maybe rail traffic, which historically has been a good barometer for the health of the overall economy, then that kind of confirms what we're seeing or the whispers that we're hearing?
It definitely feels that way. It is an additive story, and that said, S&P futures right now are 4,000.00, or they were, right? We're right at that level. We've had some really big rally days, and we're getting to 40, 50. We've had some pretty big sell-off days. We're getting to 39 and change, but we're sort of pegged around this, waiting for this sort of next shoe to drop. And we're hearing it again. I think you're kind of confirming what I was saying earlier, Tom. We're hearing it from every sector. Nobody wants to load up on shipping stocks right now because they're like, business is slowing down, right? I was listening to an interview yesterday with one of the rail CEOs, and just hearing about how much easier it is.
Yeah, it's crazy. It's a good thing I sold those calls this morning, even though it was into the red. If I waited till now, thinking a bounce would be good. Worth a lot less now.
Could China sort of come and save the day here, right? Can they really help solve the supply side issues?
Spy looks like it's building a little bull flag for a new high.
It's a serious concern. They could easily pivot back. But I think there is an area, there's a scenario that could play out where it's like supply chain could be eased enough in the face of softening demand, and we get that right size where inflation does come down sooner than we think. I think to me that's the sort of positive light out there, and that would give these CEOs and CFOs a lot more confidence if that really felt like softening inflation, that the Fed's going to sort of stand their ground and be done, right? They're going to be able to affirmatively say that, and to sort of go back to investing and sort of that the infrastructure spend and all those things that are pulling back that the Microsoft cited. So I think there is a chance here, but it's a question of how long that takes to unfold and if that plays out. A lot of the other scenarios that we're sort of looking at on the risk side are a bit negative for markets in the medium term. Again, the only thing I can say that's sort of positive on that is markets are forward looking. You're getting a lot of discounting priced in there, but the dollars come off a lot, which should help equities. Also, you've seen the 10-year is down like almost 20%, 17-18% from its highs. So rates have already fallen, dollars fallen. What future is being priced in right now, I think, is the tricky part. And as these conference calls start to really tell us that everybody's uncertain, market's on shaky footing right now.
Yeah, job market's solid right now, so we haven't had recessionary fears like this with unemployment so low, so we're going to continue to focus on that. All right, guys, let's take a quick break. And when we come back, we're going to take another look at the tech sector and talk about Lam Research, which reports earnings after the close. Stock off about 18% from year-ago levels. Fast Market's coming right back.
The dollar dropping, man. Little spike here. It's definitely bottomed here a couple times. See here. You've got that RSI divergence right there. So that's bullish. Also at this level from back here, 530. I mean, it looks like it's probably going to bounce. Move back up. 103. 104, we'll see. MACD flipped bullish also.
Earnings, a really high price stock. It's still up about 14% so far this year, so it's made a good run here. What do you got here for the background?
15 or so percent year to date, and the last year it's down about 18%. I think this will be an interesting report for Lam Research as well as the other fabrication equipment manufacturers, companies like Applied Materials or KLA Tencor, Lam Research. These are the three major players in ASML. Alongside them in Korea, are very large players when it comes to the equipment, not necessarily the end products like NAND and flash memory, which is susceptible to cyclical price changes that we've seen with companies like Western Digital and Micron, which have actually fared poorly over the last year on a relative basis. But I think the report itself, in terms of the earnings estimates, have come down. Now they're expected to earn $10 a share. Which is about 17% higher than last year.
VIX also, of course, at that
around $8.53.
historical bottom where
now,
it bounced.
on a sales basis, they're expecting about 20% increase. So this is a pretty lofty expectation for the company at $5.08 billion compared to $4.23 billion last year. Now, when they reported last quarter, back in October, they did denote as a company that the outlook was cut by about 20% in terms of the demand for fabrication equipment. But that also might be reflected in the stock price, as we know that perhaps the consumer end markets for semiconductor chips like NAND and flash memory have been down. Microsoft even denoted some really big weakness in their hardware division, which includes their personal computing division. And I think looking at Micron and Western Digital, I think that really reflects that. But on a forward basis, Lam Research looks to me like they've already cut the estimates for the full year of fiscal 2023. Because if you just consider the quarter they're going to report at $10, they're expecting only $35 in earnings per share for the next 4 quarters, including the one they're going to be reporting. So this is a situation where they've already guided lower in earnings. Stock price may reflect that. But again, if the outlook is worse than expected, we could see certainly another price decline for Lam Research, which after the last report got a nice lift because of the positive outlook the company provided in terms of pricing power. But we do know that if fabrication volumes are down, they still have that pricing power to keep their sales and earnings power intact.
Yeah, and that's the question I want to ask, because
My
they're
F key is not working.
They're in multiple silos here within the semiconductor industry. But if that memory business, which Western Digital and Micron, some of these others continue to say that demand remains weaker than they predicted maybe a quarter ago or 2 quarters ago, is that going to hurt their margins here, George?
That certainly could, and that's what like I said to Tom, if you look at their margin expectation, it's already priced in, I think, especially the expectations. If you just look at a chart of their earnings profile on a forward basis, they're expecting that weakness to continue. However, I think you bring up a good point. You have to consider the breadth of the semiconductor market. I think right now, companies like AMD and NVIDIA, which are, again,
I've never traded the VIX futures.
And system-on-a-chip technologies.
Might try those out.
Utilized in industrial manufacturing space, but also in automotive spaces. Those are areas where there's still demand. So the demand for fabrication equipment that Lam Research sells is still in demand, and I think that's why, again, they're still denoting high double-digit sales and earnings growth. It just happens to be that there's deceleration, and I think that's tied into the PC chip fall off, especially in the memory side of the equation. But again, they're pretty broad in terms of their base of equipment. It's not just concentrated in memory or flash chips or CPU chips. They're very broad in the industrial space, the IoT space, as you mentioned, as well as the automotive system-on-a-chip technologies, which have really
it's coming back down here. Still above VWAP.
Why Xilinx was a hugely attractive acquisition by AMD because of that technology.
Yeah, a huge backlog also for some of their products. I think Mizuho analyst just came out recently and hiked the price target up to 500 based on the fact that their backlog is going to keep them in the game. All right, thanks to George Tillis, senior markets correspondent here on the network, helping us break down the fundamental side here on Lam Research. Kyle, I'll go to you first here with Lam Research. Only about 136 million shares outstanding, so not a huge float. Really high price stock. What are your thoughts here on this company?
Well, it's high price because there is no float, right? 136 million is not big by standards, right? Here, listen, this is a company going through the cycle in the semiconductor space. But make no mistake, computers, data storage, anything you can put the word smart in front of. Smartphones, smart cars, smart homes. Keep doing it. You can go on. This company is going to be heavily involved in. When Taiwan Semi just opened their new multi-billion-dollar plant, you know who they named by name? Lam Research is building the tools to do it. So this is going to be involved in every part. They're a key. Oh, by the way, also Intel is one of their biggest customers. So everyone, they're involved in every part. They're critical to
just paper trading VIX
so,
futures, see how this thing moves.
Have that stock sold off? Yes, but all
first
you
right
gotta
off
wait
of the
for
year.
Is the upturn.
I've got another one sitting in a drawer here.
This stock will participate.
It works. Just
smart chips in everything.
Everything.
Refrigerators, stovetop.
Just
hoods.
put smart in front of everything.
Yeah, and the number
We're
of
about
chips.
to eat smart pizza. I think in a few minutes. It's everywhere.
And just think about how many chips go into a car right now. So the auto industry is reliant on chips for these new automobiles, and the amount of chips that are in a car that's made now, as opposed to 5 years ago, it's more than quadrupled at this point. So that's a big component. Let's bring back in Nick Theodorakos. Nick, going into these earnings, option markets pricing in a decent move on these shares. How did you want to look at this from an example trade perspective?
And there's more chips in everything except the bag of Frito-Lay's, guys. That's one of the cost-cutting measures. They're just putting less product in the bag and charging you more. So I don't know.
Go with the big scoops. Go with the big scoops.
This /VX moves pretty crazy. I might do a mini one.
There's just too much trend here, I guess, is the way for me to not take a look at the trade this way. So I'm actually avoiding the earnings vol.
Yeah, Cosmo's looking
at
strong.
Kind of really short-term strategies on these names. It's kind of middle of the road.
Yep, it broke that high, but
earlier,
it's like now maybe it'll follow through.
Primed for some real vol, but the straddles just aren't pricing in what they were. So you look at the earnings page, and then you can go back and see the volatility. This is kind of middle of the pack. And I agree with what George said. I think if they cut guidance with such a small float, further from these levels, there's the potential for a bit of a pullback here. Obviously, could go the other way. They could have an excellent report and not say much about guidance. I think if Microsoft would have not told us much, we just saw the numbers, we probably would have said, hey, okay, this is a pretty good report. So, maybe they'll buck the trend there. But, this trade looks a little bit playing the trend that we're seeing, where even if the report's solid, guidance has been pretty weak.
Tesla?
We're seeing some selling on that. So,
Lamb.
I was going 30 days out, guys, to the February 24th weeklies, and looking at buying a put spread, the 455, 435, so a pretty wide spread, 20 points wide. I think the example that I have up there had paying about 580 for it. It's come down in price because of that rally we've talked about. You can buy that for about $5.20 right now. And you do have 30 days on this trade. So basically what you're looking for here is a pullback, about a 5% pullback from these levels. It's up, nearly 30% off its lows. So just looking for a bit of a retracement based on these earnings, and you're getting quite a bit of time to have that happen. So, kind of two ways to think about this. If we do get a bit of a pullback, tomorrow, after they have earnings, you could look to take some of this off quickly, because it likely will pop in price, and vol that far out will probably maintain better than the front week vol. And if not, right, if it does move higher, you have 30 days for it to slide back down a little bit. So agree with everything you guys said in terms of the participation.
Yeah, I opened up a mini
chips overall
on the paper
and so
account to
much
see.
Demand. We're just not seeing that demand pull through in the short term. So this is a bit of a bearish
big
look
size,
at a stock.
big size future on VIX is pretty gnarly.
Got a little bit weaker than, or at least uncertain, just given where we're at. So if you pay $520 for it, you've got about a $1,480 max profit. That's below the 435 strike, and then that 520 debit is your max risk on the trade.
Yeah, let's break this down. Buying the February 24th weekly 455 puts, selling the 435 puts to offset some of the costs. We've got the 580 up here that it was trading at. As you mentioned, it's down towards 520 right now. So what you pay on this is your risk, 500 and roughly about 20 bucks right now. But this setup on the risk profile here is the same setup that you're looking at. What you pay is your risk. Break even around 40, under 449, Kevin. That's about 6.5% below the current share price.
The mini futures on it don't hardly move at all, though.
Volatility, even going into an earnings event, is in the lower third over the last 52-week range.
We're up 4% today from this sell-off.
It's in the lower third, maybe even the lower quarter. So buying directionally biased trades.
I wish Webull had
what
futures,
your assumption
man.
might be. In this example, Nick's taking a bearish look at this name. What are your thoughts here on this directional, where the risk-reward profile is pretty good?
Yeah, the stock has made a nice comeback.
I guess it looks like
the
this.
Rest of the tech sector, but it's still down almost $8 on the day. This is a bearish play. It's short about 10 deltas, and you've got paying just over $5 for a $20 put vertical. Now, you have some time. Nick did a good job of, because he's long a vertical, he needs movement, so he gave himself more time. You're paying theta, not collecting theta in this, but obviously if you get the move you're looking for, this is a multiple winner on the downside.
Yeah, and you do need a big move down, but that's why you're paying less. You have 30 days in this position too. I think that's key. While earnings are tonight, you're still giving yourself a month for that thing to continue to grind lower, if your assumption is that it's that you're bearish on this name. All right, thanks to Nick Theodorakis, Financial Risk Manager, Management Director at TD Ameritrade, for joining us, breaking down markets and Lam Research. We're coming up after the break. Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Tesla, which has rebounded over 15% so far this month ahead of their earnings. Fast Markets coming right
here are these on this paper account. /VX is just the normal VIX futures. And VXM, /VXM is the mini. So the buying power effect, I don't know if you get that, no. Buying power effect's only 11 grand on these. And only 500 on the VXM. Crazy. Hardly any. Maybe even doing just VIX longs would be better than ES shorts. How flat GME has been. That's crazy. Crazy. Robinhood's Twitter account was hacked. Thank you guys for your likes. 32 likes. Appreciate it. Legit. What did you lose? 3-2? Should always take that long on the legs. Oh, that's right, you're short. Option premiums on Tesla are pricing in a move of 10%. Nice little informative graph here. So Tesla, IBM, now CSX, LRCX, CCI, LVS, AMP, URI, RJF are today after the bell. Applied move on Tesla is the greatest at 10%. IBM's 4.8. You missed a big sell-off, but now it's bounced quite a bit. Market was pretty ugly this morning and seemed like no bottom in sight until there was a bottom. Mostly probably from Microsoft giving poor guidance, and potentially also because Australia's CPI numbers I think were bad. But it's bouncing back now. GME was also very, very ugly, down I think like over 8% at one point. But it's bounced back and now it's just barcoding down 6%. Yeah, I'm not sure if the market will make a new high today or not. We've got that level there. If it breaks that, probably start filling that gap up to 398, 399. I am thinking this RSI divergence is starting to play out though, and this trend line from last year is going to hold. Got that divergence trend. And I think GME will also be coming down. It has the same divergence. We didn't get our move, but it still could happen, but I'm less confident after yesterday and this morning, because they had until technically this morning. But then John Parker comes waltzing into chat, throwing out crazy ideas about MLK and OPEX being deferred or pushed back a day. So could be. I don't know. I closed out of my longs. I will wait to reposition.
Out and say, look, we think because of the efficiencies that we're getting, we think we'll be able to stay around the same profit margin on a 18-month, 24-month basis. And what we're doing here, if I'm Tesla, I think it's the smart thing to do. We're looking at a sector. Electric vehicles represent something like 4 or 5% of total vehicle sales right now, I believe, last I checked. That's going to 25, 30, even 50% over the next 5 to 10 years. So do I really worry about my profit margin per unit in 2023, or do I think about continuing to capture 80+% of this massively growing market over the next 5 to 10 years? I think based on what Elon Musk has done in the past and the way Tesla's had a visionary approach to things in the past, that it's the latter, and they're going for the whole pie, and that pie is rapidly growing. So I think long term it's the smart play.
And Andy, when you compare data and happiness, to some of the competitors, because I think part of, to Kevin's point, the price target cuts, right? The tax credit bonus that you get by lowering the prices below that threshold that you need. But at the same time, the upcoming added competitive pressures that are going to be on Tesla moving forward, when you've got all these other automakers that are coming out with these new EVs, these new models that are all electric, GM, Ford, you look at Volkswagen, you look at BMW, Mercedes. Is that also in your data where they're also doing it to head off competition that's coming really quickly?
Yeah, absolutely. I think this is the first time that Tesla has faced competent competition really in its entire existence, which I think is great for the consumer. It's probably good for Tesla long term. And from a consumer happiness perspective, we really see Tesla right up there with the best of them. The loyalty looks very, very high. People returning to buy from the same brand. I think I saw a stat the other day that there were only 2 or 3 automakers where loyalty was high enough that the consumer was most likely to buy that exact same brand again when they went back to the trough for another car. And Tesla was in that 2 or 3, and all the other auto manufacturers, people were looking for something different. So I think that speaks to the quality that Tesla has
moving up here.
Finally been able to achieve after a really long time.
See what happens if it gets to a tie.
To maintain scale and quality.
And going into this report, I mean, based on that data, you got the ramp up in Model 3, data that you had. Electric vehicle demand, gas prices actually ticking back up the last couple of weeks here. What type of earnings score do you have on this one going into the report?
So we're actually pretty neutral on it. We think the stock is priced about right. I would say this is a don't bet against Elon Musk too heavily type of, if you have a bearish thesis, that's fine. I get it. There's a lot of headwinds, but you've got to be risk defined if you're going to do that, because we've seen this stock squeeze higher so many times that it's a tough road to be betting against Elon Musk without upside protection.
Yeah, definitely of the possibility of some wild swings in this stock based on that report, and probably the conference call too. All right, thanks, Andy. Appreciate it.
GME.
All right, that's Andy Swan, co-founder of Likefolio, breaking down.
Looking a lot better than it was this morning. This was scary.
I like it.
This was like panic selling this morning on the market and GME and
with
a lot of
the
stuff.
hard data they get. They don't get data out of China, though. And Wedbush, Dan Ives just put a survey out that said China demand's really picking up because they've opened back up. That's probably going to be a bonus to guidance, at least, if not for this quarter, but maybe for the next couple. So how do you want to look
still
at this
coming
from,
down?
you know, an example trade perspective?
And one last thing, lost in some of the headlines lately have been them expanding plants in a couple of these places. So they're actually expanding production. Doesn't sound like a company that's worried about demand anytime soon. And oh, by the way, he could update you on the truck. He could update you on the robo-taxi. He could update you on the robots at any time during this. So
that's true.
Semi trucks too. They're starting to expand that.
Could cause some movement.
Clearly, by my statements and Andy's statements, we're looking for something in the bullish camp. But something that makes money.
It did. That's true. It did hold about that 1940.
And that is the short
1955.
put vertical financing.
I'm not
the
confident it's going
long
to
call
hold that though.
We do this often on the show where you're using one spread, in this case the short put calendar, the 130, 125 put vertical in the Jan 27 weekly, so 3 days to go, and then buying the February 3rd, Jan 27
put calendar
152 call calendar, Tom. Now the stock has come back a little bit, but this is certainly one that you can get for, it was under $1, now it's slightly over $1, Tom, but still one that if Tesla stays right here, you're profitable.
Yep. So let's break this. It's a customized four-legged spread here where you're buying the February 3rd weeklies. Those expire in 9 days, the 152.5 strike call. Selling the January 27th weekly 152.5 call. So creating that 1 week wide call calendar to the upside. Option market's pricing about $11.5 move in the shares. And then to help finance that, you're selling the 130 put in the January 27th weekly series and buying the 125 put. So creating a short $5 wide put vertical. You're paying roughly just above, it's trading just above $1 now, but we've got this for example purposes, paying 95-cent debit. Now, your risk on that, but down to the downside, below 125 is going to be $595, right? The dollar that you paid plus the width of the $5 short put vertical that you have on that example trade. Now, the apex profitability up at 152.5. Your break evens just above 130 on the downside and about 182 on the upside. So you got two of them, right? But if that stock starts to move up, you know, maybe if the market's open, liquidity is provided, maybe you close a portion of this trade so you don't have as much upside risk at this point because you do have an upside break even, Kev.
Any move towards the 152 strike, when it got close there, you would think about, you should, if you can and if you choose to, you should think about exiting the trade up there before you start losing, as the short option will start to pick up value above 152.5.
Yeah, but a good way to look at this example trade where you're taking a neutral to bullish trade along, pairing it alongside with a slightly bullish trade also, pinpointing that 152.5 strike call to the upside. All right, Kev, coming up after the break, we're going to take a look at Las Vegas Sands, which reports earnings after close, and it's had a nice spike with the reopening in China.
Yeah, GME is just weird today, man. Weird like that melt up Friday or Monday, whatever that was, Monday. Yeah, that could have been the OPEX obligations being met. But not this rally that I'm hoping for. I like the CAG to keep bearish. Conagra Brands. Been a pretty awful move since earnings. Fake out. Gap up and then just been selling. A dividend stock? The National Association for Business Economics survey showed about a third of respondents say their firms are not facing any labor shortages. Nearly 20% expect employment at their company to fall in the coming months. I don't have margin to go long on a VIX. Maybe a little more though. No, I don't have it for that. Tapped. And short right now going against me is not helping.
I did see the inventories numbers come in today, Tom, and we've been seeing some pretty significant builds, but today a little bit less of a build than expected, and I saw about 500,000 barrels added. Now the Cushing hub added about 4.26, but you've got some weakness in the U.S. dollar. I mean, that's going to, ultimately provide a little bit of support for crude, recently down to the 79.81 level. It's been kind of comfortable around this $80 level, but one thing I did notice, Tom, and keep an eye on this.
Russia slams German tank decision as escalations of conflict. Betrayal of history. Some of the sell-off pre-market and today could have been from war escalations also.
Last day, but we're up from last week, which was 335, last month at 310. I mean, this is going to start to raise notice,
paper
have
one
an
is
impact on some
down
of
a
the
little bit.
numbers
That's
that
what you're
we're
talking
focused
about.
on
So
as well. Just keeping a close eye, not only on crude prices, but also
yeah, this one's
again
stayed
a little
pretty
bit
flat.
something a little bit more closer to home to the consumer. Those prices at the pump.
Yeah, and we got the OPEC Plus meeting on February 1st also could be a catalyst there as far as production goes. All right, thanks to Ben Lichtenstein. He's the host of the Future Show here on the network, breaking down stocks and crude oil. But Kev, we're getting into another earnings play today as far as example trades. We're talking Las Vegas Sands. If you look at the chart, one-year chart on Las Vegas Sands, Kevin, since the October lows that we had over the last 3 months, this stock has gained about 21% from year-ago levels, but rallied 55% from those October levels. We've had a spike, and this is all probably on the back of China, right?
They should thank Tim Cook, actually, and here's why. Because when Tim Cook talked about Apple production leaving China, China suddenly went to reopen. And so, remember, it says Las Vegas Sands, but their biggest casinos are in Macau and Singapore.
Right.
So that's where they get a lion's share of their money. So China stocks rallied on this.
Put one
Las
on
Vegas
VIX.
Sands, Wynn Resorts, they all rallied on
Up
this.
0.9%, really?
52-week high,
Market's
though,
like
Tom, that it
just
shows
rallied since I mentioned
isn't
it.
the same as an all-time high. Because if you go back to a 3-year chart, it's higher than it was now. So it's had an incredible run, recovery down from some significantly low levels. But, Tom, this stock still not to pre-pandemic levels in terms of traffic in their casinos.
Yeah, I mentioned that big rally that we've had. RSI is about 67, so getting close to overbought levels. They control 12,000 rooms in Macau, and as that reopened, you got the Lunar New Year that's going on right now over there. So this is going to be a big report. We'll see what guidance says, but that you mentioned the Singapore Marina Bay Sands, which, by the way, is an amazing hotel. If you're ever there, go to it. It's amazing. But that's been carrying the load for this company, and that, along with some of their Las Vegas properties, has been booming. So it's kind of offset some of the losses in Macau. So I wanted to look at this going into earnings, Kevin. The option market's pricing about $2.50 move either way in the shares. It maybe looks overbought. I don't know, but you're going to have to wait for the results. So I looked at a strategy, because if you look at the rally that you've seen it in the stock, as the stock's moved higher, implied volatility, even with this event risk coming up, has gone down to the lowest level in 52 weeks. So that makes option premium and option strategies, if you're buying, maybe a little cheaper. So I looked at just going out to the April cycle. So giving yourself about 3 months in this trade. It's earnings is today after the close, but this may not be an earnings play. This gives you duration. And just looking at buying an in-the-money call, 62.5 strike call, and then selling the 62.5 strike call against it. So you're creating a bullish $10 wide call vertical, paying roughly about a 410 debit for that. That's your risk, $410. But that spread can expand to $10 if it goes above 62.5 by April expiration. Break even about 56.60 on this one, Kevin. So you don't need a big percentage move to get above that break even.
Yeah, a $10 call vertical you're spending $4 on. You need a move, like in a call vertical, you need a move to max out. But this is certainly one playing giving yourself duration out to April 21st is a significant part of this trade. It's why it costs a little more, but it also gives you time for this to come to its fruition.
Yeah, I mean, literally on that one standard deviation move, if they're positive and they go back up, that could be above that break even just tomorrow if this is a good report and the guide may be a little bit higher based on that. But when you look at directional plays like that, as opposed to, you look at a stock and you're like, I'd like to take advantage of time decay. I'd like to maybe sell a put vertical to take a bullish stance. There's just not a lot of option premium in the stock, right?
You have to understand the personality of what you're trading and use that, right? If it's not a big premium name, you got to do it via long positions, not short spreads.
Yeah, and with implied volatility at 52-week lows, it doesn't lend itself to maybe selling options to take a directional bias.
Maybe just make that a naked call then.
The risk-defined bullish example that we looked at on that.
What is that low
for the spread is the risk on that.
Las Vegas
All right,
Sands?
Kev, that's going to do it for you and I here today on Fast Market. But
wow, they've had quite the rally. I might take a bearish play on this one. It's been priced in on here. So current IV is 37%, 52-week historical. Range is 26 to 96, so it is quite low. I mean, could they have good earnings right now? Let's see. Market makers pricing in a 4.7% move. A little higher than average. The last 2 earnings, it moved bigger than what was priced in. Or implied move. To the upside. I think tightening wallets has merited enough for casinos to start feeling it. What's up, Brian? These are large. No, the money that I have in the market is not from investing. It's mostly from working and real estate. And I start off with the large. Not really. No, I started pretty slow. Started small. And then kind of kept adding. And now I'm under more pressure to invest for work or trade for work, so having to be much more cautious and not just burn through money. I haven't played an earnings play in so long. Their marketing's working. It's causing me to trade more. But I'm not trading on their platform.
Earnings, although I have to say Microsoft's only down about 1% now, so not necessarily seeing a bloodbath that would warrant this overall selling.
Yeah, and I guess that recovery we're seeing in Microsoft is coinciding with a little bit of a clawback of some of the losses from the overnight. We have S&P still down a full 30 points, about 0.75%. NASDAQ, of course, the weakest, down 1 1/3%, so thereabout. So still definitely some selling. Given
houses, yeah. I mean, real estate honestly is the most success I've had in the financial world.
500. It's been like a magnetic force in this
but
market.
Given that it has been
right now, of course,
since 2008. So if you look at the house pricing since 2008, it was
all for tomorrow's session.
Basically
before we get there, we have time
like
to
dumb
get
money in the stock market and
always kicking things off
2021 rally.
Vote segment, then we will chart and trade those
so
votes.
just prices just continue to go up and up and up, and then accelerating.
To its second quarter earnings,
we haven't really had stagflation or stagnant pricing
we'll preview IBM ahead of today's report
in the
after
housing
the
market,
close.
which
and last but not least, we will
is
look
pretty
at
unusual for the
Barclays
United States, but
downgrading
I think
Sunrun
it
as part of a
probably
broader
can happen.
repositioning on solar stocks.
But overall, it's
Names
a
that were
great investment for long term.
2022, not looking so hot this year.
Yeah, absolutely not. Looking forward to that conversation with George. He's always got a great insight about a lot of these names, especially the ones I think are a little bit less commonly talked about. Usually has good ideas about the strength of the balance sheet and some of those business operations for some of these companies. So looking forward to that conversation, of course. Big Blue, IBM as well. So looking forward to that preview. We'll talk Microsoft during FOMO. But as always, let's start here with upvote, downvote.
Oh, SPY
of the day,
broke
or at least
that level.
names to draw awareness to. First one here
What
on the
the heck?
list, not endorsements,
Huge
not
move.
recommendations. Of course, standard disclaimers apply here, but
not sure what happened there. Those technical pops have been aggressive. Starting with this one. Oh, there was a bond auction at one. That makes sense. So it was from news. I don't know what this one was back here, though. At 11:55. No, that could have been 11. Yeah, see, here was 11:55. Yeah, this was no news. Wait. Yeah, it's a 5-year note auction from that. I don't know what this one was from, but that's what that was from. Musk explores raising up to $3 billion to pay off Twitter debt. How would he do that? First Wednesday, definitely slow. Oh, did it? Yeah, GME did a tiny bit. Yeah, a little bit on BBY. Real small. I'm looking to enter a put on LVS. Just one. Yeah, it was tiny pop. May 22 run was on a Thursday. It could still happen. It could still rip. I mean, time frame wise, we're due. That's what I was looking at more than anything. So maybe I put too much weight on it being on a Tuesday. 18 bars. That's 24 bars. I'm saying the same thing to myself. Buy's moving up now, breaking that resistance. Ricky said we're gonna crash. I don't know who Ricky is. Yeah, I think we're still due for a market crash. Ryan Cohen tweeted. What the heck? Is that a reference to Apple? Buy breaking that resistance. You know you've made it when you buy a turtleneck. I'm gonna say Steve Jobs reference. Follow us on Twitter at HappyMoneyYT. Ricky Gutierrez. Oh, that guy. Yeah, I think might have to wait for data. Next week we're getting Powell and more data. So, yeah, there'll have to be some kind of catalyst to merit a crash, but I don't think the bear market's over. Look at SPY go, breaking that high. Never enters the sterile vest. Hey man, turtlenecks are dope. So the algos don't. They've shut off buying when he tweets. That was quite the thing to see if you're around when that would happen. Keep down the bucked bunny. Eyes moving up here. Ah, my E-Trade. Can I not? I can't. Did it tell me that when I opened it? I think it's because I opened that future contract. Dang it. Hmm. Get over your max benediction. You trying to tell GME? 2050 is all it needs. 2050. Very likely. Crickety cricket. Yeah, more volume than yesterday. The day before. Green Bay Packers stock? Are they public? New high almost on the SPY. Broke through that. Yeah. See here. Yeah, SPY, new high, filling this gap. One of those days. Oh, there's a little GME pop. Oh boy. I might be riding covered calls for a while. Yeah, they're owned by the city, that's right. But they're not publicly traded. Bull market is back. BBY getting that pounce? No, not yet. GME is though. With some volume. Compare. It's stressful. Doesn't need to be. That ebbs and flows. Could buy one too if I wanted to. Yippee! Not equating, not getting hyped on this pop yet on GME. Well, what's Tesla gonna do? Where are they gonna turn the market? So let's see. For some reason the VIX, yeah, the VIX futures don't really move as like an inverse. It's showing it moved on there. Moving on up. Hmm. The mini futures, for some reason it's zero still. Hasn't moved at all. But the big one has. Oh, there. Finally ticked. For the ban the wicks. No, not yet. I haven't made it yet. Yeah, I factor in gaps. I think gaps get filled. Yeah, it's definitely gotten more liquid. I mean, today's volume was higher than last. Some of these days.
Feeling that implied volatility is inflated leading into those results.
Okay, I got an LVS put.
You'll see that deflation of the implied volatility, of that normalization, and that can lead many traders and investors to look at premium selling strategies. So we went there, but also acknowledging it's a massive run up, allowing for some kind of pausing of this momentum. It's a little bit of a give back before a continued rally may be in store as well. So looking at selling a put vertical into the earnings release, going out to the February monthly cycle here for this. So not making it entirely binary around this event, but looking at selling the 52.50 spread for 50 cents. So that would be 1/4 the width of the strikes, a 3-to-1 risk reward ratio with a 51.50 break even. None of that accounting for transaction fees. $150 in risk to make 50. Neutral bullish, as we said.
Yeah, the calls I sold this morning are still.
It's about a $2.50 market
still
maker
cheaper than when I sold
the
them.
The stock's trading around, let's call it 54.5,
which is
and
crazy,
that target's
right?
around that 52 mark. It's a little bit above that, actually, giving us a little bit of cushion if it just performs as the market anticipates or even underperforms that expectation. Rick had also mentioned 51.
What time frames was important? I don't know. I don't look down at like a 1 minute time frame and stuff for gaps. I'll do 5 minute as the shortest. But hourly, daily. I mean, I see this as a gap.
Keeping in mind, even if it does have a poor
but some stuff will only
reaction
show up
to
if you're
earnings,
like on
there's
the 1
still
minute.
time, if this one can get up off the mat and recover before that expiration date.
Ryan, like you said, obviously this is a pre-earnings
And if it's a really
trade.
small
Now,
gap,
our next name, AT&T, is a post-earnings
could just be,
look because we've already gotten the
margin
earnings.
for
Shares
error.
reacting favorably, now about 15 cents off of their intraday high, but hanging on nicely despite the overall selling we're seeing in the market. And Rick, my biggest question to AT&T is why do I lose service when I'm in the middle of Chicago? That drives me crazy. But the technicals, you've got to help us out here because
Get an echo.
also seen some relative strength, especially in the telecom space.
I can't help you with your service. I don't have the answer to that one. But look, I do have some possible answers with this chart here. So in the shorter term, we were in kind of a rising wedge type shape here, where we have a shallower trend line going across the highs, a steeper trend line going across the lows. This is typically regarded as a more bearish type of pattern, but it can go either way. It's not set in stone that it's going to break downward. If it was, this would be a really easy job. But you know what you're really looking for is a break beyond either of the trend line. And in this case, we're getting it to the upside today. We're having a nice gap up that's taking us above the boundary of this pattern here. Now, you may be wondering why we stopped around the point we did today. I think that there is a technical justification for that. You can see that here, this was the start of a gap around the earnings that we had back in July, this area right here. The gap was now filled. Now we oftentimes
there you go, filling
these gaps, the price will make its way back up to that point and then retreat once again here. So I'm not saying that's going to happen for sure. I'm just saying in this case the gap was indeed filled at this point now. So that's the 2050 mark. That'll be the area that price needs to overcome for further upside. And then probably we'd be looking for some of these highs, to take out some of these highs around the 21 area. To the downside, we've got our yellow 21-day exponential moving average coming in around 19. So that's a place to watch for some support if things start to fall apart here. Don't be surprised if we do a retreat back and retest this
new highs
trend line
still
as well.
grinding
That's a
up.
common thing that can happen. But
Fill in the
50
gap.
to the upside, 19 to the downside.
Oh.
And RSI as well. Look for a break above the 2050 level and for RSI to break into the overbought area at the same time. That would be a bullish confirmation suggesting that the momentum was strong and price was breaking out above an important resistance point.
Yeah, in 2050, just over $1 above where we're currently trading. Obviously, this name has a lower price tag, so it's all relative, but also now only about $2 off of its yearly highs. So it's a nice move today, pushing AT&T. We'll have to see if that momentum can continue, but appreciate all of your technical insight. Rick Ducat, our chart master. And Alex, going with perhaps some more optimism here with AT&T, they did give pretty strong guidance. They also added a significant amount of subscribers in the fourth quarter, all trends that are pointing to some continued strength, or at least, I guess, resiliency now into 2023. With that mindset, walk us through an example trade, then leaning more bullish.
Yeah, and I think it's important to think about, where does an AT&T oftentimes fit into a portfolio? What is the desired reason for an investment in this name?
I don't know why they filled either.
Oftentimes, not entirely, but
it has to be traded everywhere. Yeah, I don't
this is a name that is a passive long position with
Supply is
going to
melt up to
because it is a little bit more stable. It does, of course,
provide
typically a high dividend yield that is not promised, that is not guaranteed. It's just something that is oftentimes associated with this type of a name that is almost more like a utility than a communication services name. And so for that reason, it's oftentimes associated with income type investing. I put a sizable portion in this, hoping that it just maintains that value. Then over time, I'll get those dividends kind of back as income over time. That's the kind of end goal for many when they look at this name. And so, where does that long-term passive style investment then meet active management? And so that's where you can implement something like a covered call strategy to try to reduce that cost basis by selling out of the money premium against every 100 shares of stock that a position may contain. And so that's what I wanted to sort of demonstrate here for this trade illustration as a way to kind of watch active management meet passive investing to kind of form a hybrid that could be perceived
Elon Musk says no to report about exploring raising up to $3 billion.
As if you didn't have any position at all. So
I guess that wasn't
not only
true.
Selling that call, but also buying the 100 shares of stock on the Thinkorswim platform or the Thinkorswim mobile app. This would be referred to as a covered stock position. Covered call is oftentimes the way that you'll hear it referred in just everyday trading or investing jargon. But again, 100 shares of stock for every standard option sold against it. In this case, I looked at this a little bit earlier. The stock was a little bit lower in its price, but it has rallied a little bit. So keep that in mind. These could be stale prices. But the 20.5 call that was the first out of the money strike in February. You don't oftentimes associate large price action in terms of movement with a name like AT&T. It's typically a little bit more stable, a little bit quieter. Today being an exception, of course, because
of the made a lot of those options on AT&T.
News is now out, so maybe we get back to more of a normalization. But with this, what are some of the things to consider? Well, first off, if we use the prices from earlier, in which selling that call and then you basically reduce that from the stock price was a 1980 debit. Well, it's really easy to find the break even. Not accounting for transaction fees, the break even is the price paid.
On a moon mission.
Max profit is going to be the difference between your strike, so the 20.5, and that price paid, which is the $70. But that would just be as, of course, if you just assume this was sort of a one-size-fits-all, that rallied through, and then you went through that assignment process. There are other things that could happen, considering if the secondary market was there, you could consider rolling that option out. If that secondary market permitted, you could look to cover that option if you didn't want to get your shares called away. There's a lot of things, and if traders or investors had questions, that's a great opportunity to use the support team on the trade desk to talk about some of those options. But also looking at it, well, what's another big trade-off? Well, we oftentimes look at just option strategies, Jenny, risk-defined spread. So when we're using option combined with stock shares, well, the risk is bigger. Now we have risk all the way down to zero. This is more of an investment in this name. And so $1,980 in risk. And of course,
Morgan Stanley investment chief is warning clients that incoming earnings reports will likely disappoint investors, pushing major stock indexes to 2-year lows, even if the economy ultimately avoids a recession.
additional income around positions. So a
Bull
really
flag,
common
this
strategy
little
that
thing.
many, even probably self-described long-term investors would say that they do.
Right, and Renee, like you said, I think a really important takeaway, you have to be more active with it, but the obvious upside is the fact that it is much more cash efficient than just outright buying 100 shares. But also important to keep in mind for both of our example trades today that multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, we will look at another post-earnings move, arguably one of the biggest movers of the day, although now giving up some of those losses, down only about 0.7%. That is Microsoft. We'll dive into the numbers coming up next.
Look at these hourly candles on SPY, my goodness. Yep, broke that resistance. Continuing to fill the gap. 399, 48. Definitely on the table. Now I just hope Tesla's earnings are awful. Volatility these last few days. Jeez. Yeah, that OPEX let everything just move freely now. Money just flowing in and out. It's crazy. I don't know. I would think it's some technical error. But I have no idea. Market's broken. Anyways, we already know that, so we just don't usually get to see it.
But telling me crazy, but I thought the stocks went up on the news of the merger, and now they're going up on the news of not having the merger. Do I just have a bad memory here, Kevin, or is something off?
No, definitely nothing is not off here. Actually, when you're looking at this particular merger, it was really frowned upon when it came to both of the investors for Fox Corp as well as News Corp as well, because these investors really believe that these companies are best to be separate at this point in time instead of trying to bring them together, which would also require a lot of operating costs in order to integrate and then try to make them profitable here. So that's why we are seeing the move to the upside here. So Loop Capital actually upgraded Fox Fox Corp to a buy from a hold with a new price target of $40. That's up from $34. And as you said, Rupert Murdoch actually withdrew the proposal to merge the company with News Corp. They do believe that Fox is really underlevered at this point in time and is trading at about 4 times its EBITDA and is strategically well positioned with a news and sports focus and not really participating in the streaming space at all as well. So they do believe that that's going to be a positive for the company here. Also, if you look at News Corp,
not really. I see just the support in this bigger bull flag
upgrading the
being
stock
held up.
here from a buy to a hold with a price target of $25, up from $17.
And this inverted head and shoulders is still in play.
Right now it's really focused as a conglomerate, but
hourly.
they're going to now be able to focus on some of the primary businesses when it comes to digital real estate, the Dow Jones business, as well as proprietary information services. So they also are believing that the company by itself can really focus on synergizing the different business segments that it has a part of it, and that could make them stronger in the long term. So that's why we're seeing these 2 moves to the upside.
Fascinating stuff. Kevin, we'll leave it there. Always a pleasure. KG, Senior Markets Correspondent for the TD Ameritrade Network. Kevin Green with the latest here on the withdrawal of that merger, leading Loop Capital to like both companies just a little bit more, quite a bit more if you look at those price target hikes. But we'll keep watching that story as it unfolds over time. It's time for FOMO now, and now for, I think, a little bit more of a market-sensitive story. That is the whiplash that is Microsoft and its earnings reaction.
So I have seen all these. So I admittedly was watching this name when the numbers were released, and I watched the headlines and the news coverage, and I saw all these headlines how it's a bloodbath for the tech sector, and Microsoft earnings signal the fact that it's going to be a horrible earnings season. And wait a second, shares are only down about 0.4% now. So we have seen a nice recovery even intraday in Microsoft shares. Now we're also seeing the NASDAQ at just nearing its intraday high. So I have to say, for all of the doom and gloom
NASDAQ's
that you read on
lagger,
Microsoft, the numbers were not that bad. And I think that's why perhaps some of the selling isn't necessarily holding today.
And that's why I think it's important, too, to remember this in the way that it happened. The numbers are released from Microsoft, and this new thing they've been doing is we're not going to tell you about the numbers or how we feel about the future until our press conference 90 minutes later. So you see the stock, it rallies up to like 255. It's a huge move. It's a blowout quarter. NASDAQ goes over 12,000 points for the first time in quite some time. And then they tell us the story, and that's the thing. And so I actually like this strategy because as someone who's commenting and providing assessments of and market analysis and commentary here, we can pinpoint now what was not liked about Microsoft very, very clearly. It is not the reported quarter. It's the assessment of what the future is going to look like, the outlook, the guidance. And so the press conference led to the volatility, not the numbers, Jenny.
Yeah, and that's a really good point. Tesla does a similar thing where the press conference is about an hour after those numbers are released. So keep that in mind for today. But they did report their profit declined about 12% for their second quarter. Revenue also did increase, though, to $52.7 billion, which was a rise on a year-over-year basis, did slightly miss forecasts. Now, executives that were obviously on this earnings call that sent shares lower did say that a revenue deceleration at the end of 2022 is expected to continue into the new year as the company lays off those workers. The CFO said they are seeing customers exercise caution, which resulted in moderating consumption growth in Azure and a lower than expected growth in their new businesses. For the current quarter, Microsoft executives expect revenue to fall between 50 and about 50.5 billion, which did come below forecasts. Now, their forecast, though, I want to point out, I think is extra meaningful this quarter, as executives did tell investors a year ago that they expected double-digit percentage growth in their revenue and operating margins, and we've since seen the tone so drastically shift, which I think signals all that the last year has been for Microsoft. They did, of course, announce thousands of layoffs last week, part of a big wave of job cuts we've seen throughout the tech space, but they are still, they said, in the process of acquiring Activision Blizzard for $69 billion. Obviously, that's been met with some regulatory hurdles, but they did still report their cloud revenue of just over $21 billion. This was up from a year ago, did exceed the Street's forecasts. Azure specifically did grow about 31%, also outpacing the Street. So from a cloud perspective, things were better than perhaps feared. And that's why I say this report, the doom and gloom isn't necessarily warranted on all fronts, because there were areas that grew year over year that did exceed the street's forecasts. Just felt like it wasn't good enough. And oftentimes I feel like the headlines can overshadow the actual numbers within these reports, Alex.
I think that's a really shrewd observation. I guess the real takeaway here is, hey, if Microsoft's not able to hit what they told us, what does that mean for these smaller companies that have, way less runway, that don't have the moat and the bajillion different business segments that a company like Microsoft does? I don't think there's a feeling that Microsoft's suddenly going to go away. I mean, there's no one saying that today, but I will say this, there's no way for me to know this for sure. You look at the information as you get it over time. We've gotten, the last year's worth of earnings announcements have been in a different market environment than the years prior. And it seems as if the leadership at Microsoft, probably rightly, is assessing the market conditions and providing a little market timing in the message that they relay. And what I mean by that is, you look back to a couple quarters a year ago around this time, or even in the kind of spring and summer months, there was a couple times where the market was on the ropes, and Microsoft reports numbers that were a little disappointing. The stock is kind of in a tailspin, and they come out with a very upbeat message, a very strong outlook. And it was enough to buoy not only Microsoft, but also the market in several of those occasions. We're looking at a slightly different scenario today and yesterday, Jenny. We've had a market that's had a pretty okay start to the year. The reaction to the numbers was actually quite strong. I think there's a reasonable assessment that maybe this leadership looked at that and said, hey, this is the time for us not to get over our skis. We can be a little bit more conservative. We got a little bit of runway here. Yeah, maybe it'll send the stock lower over the next 24, 48 hours, but this isn't going to break the market today. And I think that they maybe rightly took that risk, and it's already sort of paying off with the stock almost recovering intraday.
And I think that transparency is key for a company that guided so above where they came in for 2022. I think now being more reasonable with expectations maybe isn't what the street likes to hear, but it does perhaps brace us as investors for what is to come versus being overly optimistic. But the feeling today, Alex, and the FOMO feeling we're feeling in Microsoft, even though shares have recovered nicely, I have to say, is definitely to the upside. We're seeing shares lower, all of this negative sentiment piling in around big tech.
Good job, Ryan.
What do you
think
see on there? Trade utilizing some of this weakness today?
Yeah, the reason I would say I think the FOMO in Microsoft is almost exclusively to the upside is because of what Microsoft's been able to build over the last couple decades, and especially
you just chat in general.
The last decade, as it's just
talk to me in voice. You can jump in.
This is arguably
jump in the lounge
Apple,
if you can't get YouTube stream. I'm not sure.
To the infrastructure of the stock market in terms of math. It's so big in terms of its placement in so many of the different indices because of its visibility and the segments that it operates in. So I looked at a strategy, and it's actually quite interesting because of the nice, impressive move that we've already seen in the stock. These strikes are almost entirely stale, but you'll get the idea if you just imagine the stock price back to a, let's call it 235 or so price tag. But I looked at buying the 232.5, 237.5 call vertical. It's going to be entirely in the money now. So probably if you still had a very similar outlook, you would bump those strikes up so that you had one strike in the money, one strike out of the money. But I think this actually is a good conversation, not because the market timing maybe was right in the sense that the stocks rallied a little bit, but the thinking behind it of, okay, Microsoft is selling off here. The numbers were okay. You liked it initially.
Oh, okay. Yeah, no, just in general. You
chat. Threw some cold water
see general. It's under text channels.
How often does Microsoft really sell off? I mean, that's the question that many investors ask themselves. Like, how often do I have this opportunity to buy the dip in Microsoft? And depending on market conditions, maybe less often than others. Of course, the last year has been pretty tough for Microsoft and plenty of other names. And so buying the dip has been difficult, but using a risk-defined strategy, you can control that risk going in, know where your break even is, and you don't need a ton of movement to get to that max profit zone. So at the time, the stock was actually, I believe, lower than 235. And looking at
What's
this,
your team alert?
the break even would be 235. The stock's already, this is already entirely in the money. This is already technically in the max profitability zone, but we still have a ton of time left. There's no way this is trading anywhere near $5, even in real time, with it fully in the money. But you get the kind of thought process of, you know, this is an opportunity to get into a name that many investors potentially see as a something they believe in, or see an opportunity in, despite the downwards move on earnings. And you can see here equal risk on both sides as priced, and at the time that we were looking at it, break even near where it was trading.
If you collapse
and
all
it
of them,
didn't need much to get to that
you
max
should have text. If you don't, maybe you have to agree to something.
I also think it's a bit of a relief that they've already released their quarterly results, as they are really the first name to kick off mega cap names, as we get a slew of some of their bigger peers or equal to peers next week. So it'll be a busy week next week for names like Apple, Amazon, Alphabet, just to name a few. But we'll leave it there.
I tagged you in
for
general.
FOMO. Now, coming up next, we'll talk IBM ahead of their earnings day after the close. This is like, if Microsoft is the today tech, this is like the grandfather of tech, Alex. We'll dive more into those numbers coming up next.
Yeah, so since I opened that paper trade on VIX, it of course has just plummeted because of the market rallying. But yeah, I think I could manage the bigger one. It moves about like an ES. But what's nice is it's way less. Or no, maybe it's not way less. It's an ES anyways. Oh, it's the same. Wait. Oh, it is the same. Okay, never mind. Here's how these move, actually. I'm gonna close this and reopen it. See if they... What was I, short? No, I was long on it, yeah. Yeah, it's showing P&L day because I closed it and reopened it, I think. But there's P&L open on that contract. And now we'll see how they're correlated. GME edging up slowly, almost back to open. What a recovery day.
that, Jenny. Well, shares are modestly lower ahead of the results after the bell today. They're down about 0.6%. And really, IBM hasn't gotten that boost that a lot of tech companies have gotten so far in 2023. It's actually about flat on the year. But if you actually, look a little bit further out, you'll see that IBM has outperformed the market over the past
intraday
year.
moves are getting big.
And figure the NASDAQ is down quite a bit more than that, as is the S&P. So investors obviously were focused on safety over growth last year, which is, they've changed their tone a little bit now, which is why we're not seeing a huge pop there. But we never expect huge growth numbers out of a company like IBM. As you said, about 5% revenue growth. I think the target is 4 to 6%. So in terms of what Wall Street's expecting, revenue of $15.55 billion.
39948 my next level up, and then
$3.61, which would also be higher than the year-ago period.
400.
Of course, like so many of these earnings that are coming out, we're going to pay close attention to outlook, especially given macro headwinds. Obviously, IBM plays on both the hardware and the software side. Want to see what they say about a potential slowdown in tech spending, but also the dollar isn't as strong anymore. So that was a big headwind for a multinational company like IBM last year. So that could actually give guidance a bit of a boost. Investors, of course, will also be focused on 2023 cash flow projections. So we'll look closely at those. And also, it's interesting because consulting is a big part of IBM's business. So instead of just competing against companies like Amazon and Microsoft, they're actually working with them, which gives them a bit of an interesting perspective. So I'm curious to see what they say just about the overall landscape right now, especially on their consulting business. And also they operate and do quite a bit in AI. And, speaking of Microsoft, AI has been a hot topic lately with Microsoft's third investment in OpenAI. So interested to see if they have talk about any sort of expansion plans on that front as well. But, shares down modestly ahead of that report, so we'll have to see. I think its share price is important, though, because of the fact that it did outperform the market. Sometimes investors are a little bit less forgiving if they don't surprise to the upside, if you will.
This has been a stock that's done a whole lot of nothing for about 10 years, it seems like, kind of hovering around 140 for like 5 years straight. It's had some trips away from that mark, but it always finds its way back here.
CTA machines,
the analyst community, they got respect for the elders of tech, or are they looking elsewhere?
Well, we actually saw an upgrade from MoffettNathanson last week to market perform and a downgrade from Morgan Stanley last week to equal weight. So they're both staying on the sidelines for IBM, which is where the majority of analysts are right now. When I took a look at the breakdown, 7 buys, 12 holds, 2 sells, median price target of 145. So only about $5 upside from where it currently trades. Morgan Stanley, with that downgrade to equal weight, did say, should our 2023 industry outlook prove correct and early cycle dynamics emerge in mid-2023, we see risk to outperformance given the stock is trading near record highs and IBM historically underperforms IT hardware and its peers in an early cycle environment. So it doesn't necessarily bode well for them. In terms of MoffettNathanson, they said that the turnaround has been successful enough that IBM is now able to keep its head above water and can sustain organic revenue growth in the low to mid single digits. So not quite as bearish on the company anymore. Also, Evercore recently maintained its inline rating but boosted its price target to 150 ahead of results. Thinks IBM is actually positioned to outperform both in terms of Q4 results but also in terms of its outlook because of that favorable currency situation that we talked about. He holds a constructive view on IBM's fundamentals despite this uncertain macro
VIX just isn't going to move as much as the US.
It looks like half of the company's annual revenue is recurring. Its workloads are mission critical in nature.
Makes sense.
And IBM has a predominantly large enterprise customer base that he thinks will be more resilient than smaller companies in a downturn. So definitely some, in terms of fundamentals, those sound pretty bullish, but not going as far as actually having a bullish rating on this company because, as you said, it's gone a whole lot of nowhere, but it has outperformed.
Yeah, and Caroline, I read that similar note that highlighted these essential computer systems as well as these large enterprise customers. But I just have to say that if Microsoft is struggling for growth in 2023, how in the world is IBM growing? Because Microsoft is also in like pretty much every computer, I feel like, in the country is their offices. So I just have to think that if Microsoft's not able to grow, good luck to IBM. But maybe I'll be pleasantly.
The thing is, though, with Microsoft, we're talking about growth in like the 30s area looking disappointing, whereas, 4 to 6% revenue growth for a company like IBM. It's growth, but it's slow growing.
Okay, that's a really, really good point. So we'll leave it there, Caroline, but a good point to think about as we go into IBM earnings day after the close. It's Caroline Wood, Senior Markets Correspondent for the network. Now, coming up next, we will end the show with
she shut you down,
Sunrun.
girl.
Shares are down over 8%. We'll dive more into the Barclays
You
analyst
running your little
downgrade
mouth.
coming up next.
Sunrun coming up. Sass. Yeah, explain the Form 4, what was on it? Someone on Discord talked about it. They just said it was just about the vested shares. Is that what was on it? How the vested shares, they chose cash over shares. 4.96 a share. Okay, why is that bullish? I've heard that argument. I'm not sure of all the intricacies of if that would be considered insider trading or not. I see the logical thinking of how it could be, but there's maybe some technicalities in there that wouldn't constitute that as insider trading. Any other reasons though?
There's a reevaluation because of the fact that the tax credits aren't necessarily permanent. They are effectively more temporary in nature. And the other thing is you got to think about the installation base. Commercial installation may be improving, especially in warehousing. I think that's still an area where there's a lot of demand for solar, but the residential space, that might be a challenged marketplace on a forward basis, because if people are having trouble, essentially with inflation because of food and fuel, then you got to step up to housing and durable goods. And at the end of the day, I think solar is probably down on the list for people who are looking to make upgrades to their home.
George, here in Chicago, we're just happy if we see the sun sometimes. So I think you did a good job of breaking the company down. And I know we all kind of learn differently, but one of the ways that I like to kind of learn and talk about things is comparing it to things that are different that maybe I understand a little bit more. And so if we're looking at this, not necessarily in the sense of exactly the solar industry and the haves and have-nots and
maybe
where
it is
to go, but more of the
we'll find out
to communicate kind of the risks of investing around
396
one-time
calls. Yeah, when'd you get
items.
those?
And so you talked about this Inflation Reduction Act of last year, interestingly named, but we'll leave that there as well. In terms of this excitement around all these stocks, we saw names like First Solar go catastrophic, parabolic to the upside. Yet it to me always seems in hindsight so obvious, and maybe even in real time to me, that hey, this is a one-time thing. Like, this isn't going to just keep happening this way. Why are we buying these stocks after they doubled after a news item? this is the same to me as buying Peloton at 150 because we were at home for a year and we're never apparently going to go back to work. Like, some of these things just seem so obvious, George, but you know, what would your insights be to the investor that's kind of wrestling with those ideas?
Really good stuff, Alex, and good
morning?
questions to bring up. You know, a couple things to
What
note.
made you bullish
is,
this morning?
The
Just that
solar
it's already
industry
down
itself, if you
1%?
look at the scalability, scalability is improving and cost per
Win this morning.
and cost per unit is
That was quite the nosedive
decreasing.
this morning.
That's good over time. But then you have to look at the competitive landscape. So what makes First Solar or Sunrun better than each other? I can't say. Are there qualitative differences? I don't know. But my point is essentially, are they brands and are they recognizable brands? And so that's another thing is sustainability, not just sustainable energy. I'm not saying that. I mean, sustainability and its business model and its growth and its offerings that are different than their competitors. I mean, companies like Enphase Energy, SunPower, First Solar, a lot of different companies out there. Then you got to throw in Tesla. Tesla is a major competitor now in the solar and software space for residential and commercial applications. So at the end of the day, you know, the solar industry is going to consolidate. I'm not saying it's happening now, but at some future time, because there's so many different solar providers,
you held through some
as prices start to come down and
negative
additional installations are increase over time.
Nice trade.
But I will say this, from the standpoint of Sunrun, I'm just looking at it from a financial standpoint. They got a huge boom. The stock reflected that last year. But on a forward basis, I don't see any profitability. Just to give you an example, next quarter, they're expected to lose 10 cents. So how do you go from, you know, Q3 where you earned 94 cents to a loss of 10 cents? You can actually just, you know, denote and just think about that for a moment. That's essentially a tax credit. That's a one-time issue. Now, that's not sustainable because at the same time, the company, which generates about $2.1 billion
if there was an M&A, they would disclose it most likely before that.
$25 million
I don't know why that would be, but that's what I heard.
Again, you know, you have to consider the financial fundamentals on a forward basis, not necessarily the past, and they don't necessarily look good for Sunrun.
Yeah, George, appreciate all of your thoughts there. And obviously that mindset attributing to today's weakness down almost 8%. We'll leave it there. George Tillis, Senior Markets Correspondent for the network. That also does it for myself, for Alex and I today for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
The 10 and 1 year Treasury yield is the most inverted it's been since 1981. Spread between the 10-year and 1-year Treasury yield down negative 1.26% last week. The last 8 recessions in the U.S. were all preceded by an inversion in this yield curve relationship. So these gray bars are recessions. But today we just changed the definition of what recession is, so we So my short calls, I should have made them long calls. Actually kind of crazy, just this small of a move. They're up 43%. Or no, it was actually just from here to here. It's not even from here. From right here to there. feel like I'm taking crazy pills. I could get 43% this day.
Of the day, we were able to say 4 straight weeks of gains for the Nasdaq, but we will have to wait and see, because right now the Nasdaq is down about 0.75%. Of course, Microsoft and many of the tech names have been under pressure after those earnings. S&P at 4,000, back above the 4,000 mark, 4,003, down 13 points. The Dow at 33,663, down 70 points, and the Russell is at 1881, losing 0.25%. For some of the biggest stories in the markets, we welcome in Renita Young, senior markets correspondent here on the TD Ameritrade Network. I was just saying those tech stocks have been putting pressure on the market. You're focusing.
I don't think that's hitting that today.
Tell us a little bit.
Maybe after hours with Tesla.
Microsoft is down today. It is off those lows of earlier this morning, but
you can hold. You can close those out.
Now,
what, 50 minutes after close?
It missed analyst estimates. We also saw it due to Microsoft seeing softer PC demand, which really hit the cloud services, Azure, as well as
they'll say
Windows
Azure.
software demand.
I thought it was Azure.
Let's take a look at some of those numbers to see where they rounded up. Earnings per share adjusted came in at $2.32 a share. That's versus the $2.26 a share estimate. Revenue was below expectations. It came in at $52.7 billion. And it did see a growth.
Thank you guys for your likes. I appreciate it.
For the quarter, year over year. Also, the company took a $1.2 billion charge in the quarter, connecting with its decision to cut 10,000 jobs. So it was also connected with consolidating leases and revising its hardware lineup. Microsoft is also investing $10 billion in OpenAI. That's the creator of ChatGPT. Now, analysts are slashing the price targets. Of course,
Wedbush coming down here
from 290 to 280, keeping outperform.
Made it all the way up to that 9 moving average. Looks like that's
290 to 280,
resistance for it.
Buy. Raymond James cutting from 280 to 270.
Sorry, not 9. It's 180.
Outperform rating, but Citigroup was the only one that boosted the price target from 280 to 282, making it a buy rating there. And looking forward, management is expecting $50.5 billion to $51.5 billion in
Apple stopped mandating employees a COVID-19 test before coming to the office.
All right, thank you for all of that. Some great stats. Appreciate it.
We're still doing that?
Young, thank you very much. Good luck there at Microsoft and some of the details.
Yeah, I think we do, Jonathan.
Adam Curran's with us,
I think that is back on the table. A little too soon to be very confident in that, but yeah.
Yeah, I'm a macro bear.
I think that is a
I
possibility.
think that there's just too much bad economic data that this market needs to continue to digest. The worst of it's going to come from the real estate industry. When you double the cost of borrowing, that's going to have a profound impact on home prices. We're already seeing it. Wells Fargo announced that refi applications and new loan origination applications are down like 90%. Think of the domino effects that's going to have on other areas that account for real estate transactions, which is like 17% of America's GDP. Think of a closing attorney. Think of an appraisal or someone who conducts inspections. All of these people are going to be hurting for work. That's why we're starting to see the layoff lines form in Silicon Valley and even up there in Wall Street. People are going to be losing their jobs. We're not even in the first or second inning of the number of layoffs that are going to be occurring in the near future. So I'm a short-term bear.
Congratulations,
however,
Ryan.
betting on the end of the world is very rarely a profitable bet.
All right, so in the long term, sounds like you have some optimism underlying. In the meantime, when we look at different areas where you may be bearish in the near term, how about something like real estate? Where do you stand on that?
Well, just like I outlined, I think even if real estate were to drop 40% in some areas in this country, we would simply be back to where we were in 2020 around COVID. So I think there needs to be a massive bloodletting that happens in the real estate markets. I think a lot of people are going to lose their job. A lot of people are going to lose equity in their homes. And the other thing that the market's up against right now is the risk-free rate. And I generally serve retirees, so people in their 60s and 70s, and they are salivating over risk-free rates of return 4 or 5% per year. That's going to be another source of pressure where people are going to be taking their money out of capital markets, out of equities, and putting them into safe, boring things that are going to give them 4.5% per year.
I mean, you got to do some of the safe, boring things, right?
Yeah, I think 30% drop still from here is likely overall average, which is what we saw in 2008.
Tell me a little bit about where you might be more risky.
But we've already, I think, dropped. I don't know what the average is, but I think we've dropped at least 10% from the highs.
I'm going to be right. I just want to bet I'm not going to be wrong. There was a consensus number of analysts who predicted where the S&P 500 was going to head around this time last year.
We've already dropped like 20 or maybe 30%.
The consensus was off by about 25%. Most analysts thought the market was going to go up around 5%.
Housing prices, but yeah, I think another 30% at least.
Predictions on the market.
I'm looking at housing prices like
because we realize the people that we
basically if I can get it for 2020 prices.
But certainly
I'm more or less
a slight tweak, a thoughtful tweak, a flight to safety right now
houses,
makes a ton of sense for most
houses here 2 or 3x in the last couple of years.
To maybe turn the dial down 10, 20% of your portfolio, put it in flight to safety things because you're being rewarded to be secure now. If we made that same transaction a year ago, we'd put 10, 20% of people's money into things that are only going to make 1 or 2%. Now they're making 4 to 5% in things that are principal protected. So what we're telling people to do is maybe turn the dial down a little bit because we think there's going to be more bad news to come this year.
I also think it's interesting how you talked about the baby boomers and how they may amass some wealth.
Yeah, I mean, how's it been crazy since like 2010,
that makes sense to me.
2009, like after the crash 2008, it's just been
they'll get for their business. They're willing to sell.
Nice climb, and then of course
certainly
got crazy.
20, 30, 40, 50 years.
The last 5 years, but really just like since COVID, that rip out of COVID was
kind of the
I mean,
optimistic
yeah,
things
2,
that
3x
I see going on
since
out
then.
there. There is a tremendous amount of wealth in the baby boom generation, and a lot of that wealth is tied up in business interests as well as highly appreciated real estate. And a lot of these individuals are going to be looking to have a liquidity event, meaning sell their business. You're right. They're not going to get the number they would have gotten a year ago when you used to be able to borrow money at 3%. But they're still going to be looking to have that liquidity event, and that's going to spur a bunch of economic activity. We're going to see a lot of people selling maybe that beach home or that home in the mountains that they no longer feel like doing the maintenance with and traveling to. And then finally, you know, some people are going to pass away. Father Time is going to catch up to individuals, and we're going to see a lot of wealth transferred to the next generation. I think that's a positive thing. That's why betting on the end of the world is not a very profitable bet. But I think in the near term, there's more pain to come, but the world's not coming to an end, and America is, the American dream is alive and well, and our capital markets are still the place to be.
Yeah, I see the beautiful flag in the background. I mean, at this point now, are there certain areas that still could be exciting, like tech or anything else?
Well, gosh, I look at some of these tech names, and I look at their PE
low probability,
ratios,
high reward.
Like utility stocks. All the while, they're like reinventing the world that we live in. So there certainly are some technology names out there that make sense to us, and just purely because their valuations, you know, just like their valuations were insanely high at one point. Now they're starting to look like you know, insanely low. So we're not completely. There's still some stocks that offer value in our eyes.
Right, understood. And when you look at the big picture and you look at abroad, is that something that you put into a portfolio regularly, or are you mostly focused here at home?
We have a saying where we like to hunt with grenades rather than arrows, right? So if you go hunting with an arrow, you run the risk of missing the target. But if you throw a grenade at it, chances are a few of those things are going to stick. So our methodology is typically using low-cost index funds and targeting sectors of the market that we think are the most oversold, and there's some value there.
GME weeklies?
All the while serving a population that's not getting any younger. And knowing darn well that if their portfolios simply make 4, 5, 6, 7% per year, most of these individuals are going to have more money hitting them on the head every month than they can shake a stick at and be able to spend money confidently. So just balancing all of that.
I've done my calls
right
this
now,
morning.
we've got a heavier emphasis on safety and using risk-free things that are going to yield reasonable rates of return historically, but then periodically making some speculative bets so they can reap the rewards if the market continues to do well like it is so far in 2023.
Understood, without a doubt. And even
I'm not going into SPY calls though.
At least you know
I'm bearish.
what you're up against here.
But it depends on Tesla, but TA wise, I'm bearish.
Thank you so much.
Financial Partners. Thank you. Plenty more to come right here on the watch list. AT&T's head of investor relations joins us to go through the latest earnings and explain the continued growth that the company is seeing for wireless and fiber. And we'll take a look at shopping trends, what to monitor for 2023. Our panel dives into all things Texas Instruments. And up next, how will the Fed manage inflation?
Coffee! Aptera released their like launch edition vehicle, so the first one that they're going to produce. And they're all going to make, I think, 5,000 of them. So it's kind of just like they're not going to have all these different options to start. Just start with one package. And if you want to get to the front of the line, you have to basically order this one. And then after that, they're gonna move production to all their other battery sizes and powertrains. But on this launch one, they weren't doing DC. Holy pop! Wow. Yeah, filling that gap. This is the third pop like that we've had today. This one broke that technical. Let's see. I think this one then. Whoa, that wick. What the heck is going on? Oh, it's to 400. Oh, that's crazy. Directly to 400. I think Ted's about to get spy run. Yeah, I know, but I'm pretty deep already. I don't want to close at the highs on my short, so I'll probably just ride it. Fortunately. Yeah, that was quite the pop straight to 400. But yeah, Aptera, so their launch vehicle, they're not going to do DC fast charging. The vehicle is basically the most efficient vehicle ever made as far as production vehicles. I guess it's not in production yet, but that's kind of what they're going for. So, and then it has solar charging on the dash, on the roof, on the back. So you can get up to 40 miles a day just from the sun. So for most usage of a vehicle, you wouldn't need DC fast charging with this kind of car. And I think that was kind of their reasoning for not putting it in their first car. But I was reading the YouTube comments and everyone was freaking out like, it doesn't have DC fast charging. I was gonna road trip from here to here. But I guess, I don't know if they didn't understand that this is just on their first launch edition. Not like, but anyways, I was like, you guys need to clear it up with your investors. They all got misled. They're thinking that Aptera is not going to make a car with DC fast charging. So they sent out an email here, it looks like. Maybe they changed it, I'm not sure. I'll read it. We're going to spend the day. It looks like it's a very consistent downtrending channel. I think down from here-ish. Am I a bear now? Ryan, dude. Careful. I mean, yeah, that's basically what we're seeing is that trend line somewhere around this area. I was bullish on it yesterday because we're holding above kind of but it's so close that it's not really enough of a confirmation to me. But now today with this huge move, It could still be bullish. What's holding me bearish is this RSI divergence right here and here. It's pretty subtle, so not a great indicator, but it's, you know, the same indicator we had back here before drop, but this one was a little greater as far as the divergence on there. So I mean, today this is a massive move. These daily candles have just been wild, and the fact that these, now it seems like all these candles are holding above that line, yeah, it might be setting up for a bull run. Especially since we broke this level too. I thought if we resisted there, it's kind of a head and shoulders also. And this thing is squeezing 400, over 400. What'd I say I didn't think it was gonna hit? 400 and what'd you want it to hit? I can't remember. 401.50? Is that what it was? 401.50. Yeah, I didn't think that would hit today. Holy crap, it's getting pretty close though. Oh my gosh, I mean it's almost green. How long will the small cap, micro cap stock mini bull run last? I don't know. I mean, it might be over. Lasted like 2 weeks. Or it's just getting started. This is exuberance in the market. I mean, look at these swings. Like a 30-minute. Yeah, I've purposely not been looking at my futures account because I don't want to see how much I'm down on that thing. Makes it much easier to stick to your play. But hopefully I'm not wrong. Yikes. There's a large up move, almost green on SPY, 0.03%. On the show they were saying Microsoft's numbers were good, just the guidance was bad. I don't think their numbers were necessarily good. It was like pretty much close to in line expectations. It wasn't like it was crazy beat. Almost a 1.7% move today. It's pretty large, bottom to top. But then yeah, the guidance is what caused this. But I mean, jeez, man. Makes sense, and it's all made up. What are they talking about on here? Peabody. They're reporting. Yeah, so anyways, let's see. We have some great news and owe you an explanation. We're excited to announce that all Aptera vehicles will come with DC fast charging, including the first launch edition vehicles that roll off the assembly line. Alright, so they've changed. Yeah, I mean, there was people were like, oh, I'm canceling my order, I'm pulling out my investment. I don't think I actually can pull it. I literally don't think you can even sell it, these shares. We'll be able to offer between 40 and 60 kilowatt of DC fast charging with our launch edition vehicles. Once testing is complete, we'll provide an update on our max charge rates. We will also be working on a 100 kilowatt version for release down the road. Our DC fast charging system is designed to work with the supercharger network, so if Tesla agrees to open their network up to Aptera owners, your launch edition vehicle will be ready to go. Tesla's supercharging network has 60% more North American charging standard posts than all the CCS equipped networks combined. So it could be a huge selling point for future Aptera owners. Aptera was always meant to be a true road trip vehicle, and now with the fast charging standard, can't wait to see where you take your launch edition vehicles. That's crazy, they flipped. That's good and bad, I think, that they've changed. Hate that GME tracks the SPY on the way down, candles on the way up. It's just blind man walking. Yeah, I know, this is pathetic. Let us know, let us know, let us know. Those of you that have SPY calls, congratulations, man. That's a big move. So where's the next level here? I guess, I mean, broke that one. Probably like here. But we're right at that 400, so. Yeah, here, this is probably the next level up. Not too much further from where we are. 439. Yeah, it's basically where it hit. That 401. But yeah, so the good and bad on them with their fast charging, like, so the problem with fast charging is heat. Energy, your heat is always the problem with energy, transferring energy. The more you transfer, the faster you transfer. Your enemy is heat. And so I assumed they didn't have fast charging because they didn't have the cooling capabilities for their battery. And potentially the cost to do it on the launch edition vehicles. But now that they flipped, like, that's good because they're listening to the consumers and doing what they want. But to flip so quickly makes it seem like it might not be good, because how lofty are these expectations? Like, if they can just so easily say, "Oh, we're gonna have it," it makes the credibility of them saying that they weren't gonna have it seem not very credible. Basically, like, why wouldn't they have had it in the first place if they could easily just say we're gonna have it? So I don't know if maybe their margins, or maybe they're gonna increase the cost of it. They still haven't released the cost of the car, so maybe they'll just say, yeah, we'll give it, and we're just gonna increase the cost. But yeah. So anyways, last Friday we announced our launch edition, the first series of over 40,000 orders for a fleet of ultra efficient vehicles that will freedom from the grid a reality. What? Doesn't make sense. The beginning of solar mobility for all. Probably can't play this video. Oh, this is a new. So here it is, I'll show you guys. This is the vehicle I was talking about. And so I think the 400-mile range is the same. Those they're like the first one. So if you want to buy it, this is going to be the one. If you want to get different options, you're gonna have to wait. This is the first one they're gonna manufacture. This one's all-wheel drive. There you go. So these numbers are totally different. This one's going to have NASC or NACS port with DC fast charging, 40 to 60 kilowatt onboard charger. So it's going to give you level 3, 400 miles per hour. That's crazy. It's because it's so efficient. That's the thing, and that's why it doesn't necessarily need the fast charging, because it's so efficient. But yeah, those. That's a lot. Level 1's 13 miles an hour. I think level 1 is just like a standard 110 outlet in your house. I think you'd probably get that. But you're going to park this thing in the sun and get 40 miles a day, and that'll add up. If you have a 1,000-mile range battery, which this one's not coming with, this one's 400, but depending on how much you drive, you know, you might be net positive on your power. And that's why I want this, and I want it to have discharging capabilities to charge up battery pack, or not a battery pack, but to power the house. See, all this is actually exposed carbon fiber. It's kind of sick. So it's actually a pretty big car. It's deceiving because it's 3-wheeled, but the width of it is the same width as a F-150, wheel to wheel. And then the length, I can't remember the length, but it's long. Like, you can lay down, 6-foot person can lay flat in the back behind the seats. Yeah. SPY rejecting that 400. Sodium ion batteries are fascinating. No degradation and minimal heat. Oh yeah, I think batteries are going to be, for power storage at least, like, might not even be, you know, yeah, it could be totally different. Absolutely. Yeah, I mean, the 3-wheel thing, like, it's going to take, it's definitely not for everybody. To me, it's not something I like just for, I actually do think it looks pretty cool, but I don't like to be flashy at all, so that part of me doesn't like it. But that being said, I think it looks cool in all black. That color scheme I don't like at all, but I just love its efficiency and a potential just to basically be a mobile solar power bank is how I kind of envision it. So you just imagine basically like a mobile solar power bank. So power your house, go camping, whatever. So here it is in black. I think it looks pretty sick in all black. Like kind of a semi-gloss.
Going the way you had hoped and the way you invested and the way you laid the groundwork for the last 2.5 years.
Yeah, that's another thing that with the fast charging, you're going to degrade your battery much faster.
There's many people who look to names
hurt
like
the amount of life cycle you're going to have.
Or being in the right place in the right way. I'd love to know.
I mean,
about
it's
the
definitely practical
competitive
for road
landscape
trips. Like
and your
you
thoughts
want
there.
that, but
Also about expanding abroad.
you're
For
road
example,
tripping. Most people road trip maybe 10% of the use of their car.
So many of those were abroad.
Spy getting rejected up here.
Yeah, so first and foremost, when you start to think about the competitive landscape, look, we're in a very competitive marketplace, and that's great for the American consumer, because when you think about it as an industry, a lot of us are investing significant amounts of capital when it comes to connectivity services. And as you know, I think connectivity is just becoming more and more important when it comes to our way of life and how businesses and consumers
Hundreds of
operate.
thousands.
So just in general, when you think about that competition,
Yeah, it's not. I mean, it doesn't look like a traditional car.
We think that's a real
Three-wheelers.
positive from an overall industry perspective. Where we're hoping to differentiate is be the only player that
You don't have fur on your dashboard? What's the matter with you?
So we own the networks and run them. 5G and 5G.
They're pricing it. No, you can get them. I mean, we'll see when it actually comes out, but they're not even
right now.
They're not even 100,000. They're much under that.
US, the largest and the fastest growing.
I think their like starting price on some of them are around 30K.
So we really believe that
with his like, which is like 250-mile range.
Highlight, you mentioned the competitive
front-wheel drive.
Fourth quarter was very competitive.
I think it's under 30 actually. I think it's like 25.
Available in the marketplace, and candidly, we were not the most promotional. And despite not being the most promotional, we delivered.
But looks is just that's just a cultural thing,
that were better than
right?
what the street was expecting, and our
Abe Lincoln's beard looked dope then, probably.
Really good about our go-to-market strategy, and what you should expect from us is
today
more of the same.
People don't sell.
That
changes,
and from an international perspective. Right
this
now,
is weird initially, but maybe this design, will be adapted more. There's so many advantages to being three-wheeled. It's actually
in that business.
That's why I think it could work as a business, as an auto manufacturer, because they don't fall into regulation. It's kind of it's technically an auto cycle, so there's way less regulation on it, so they can build it a lot cheaper because they don't have to go. They have to follow all the ridiculous regulations on cars.
And as
so,
I look at some of the metrics, also thinking about the dividend.
Yeah, that gives it a ton of opportunity, and then less moving parts, so it's
folks, that's something that people
less to manufacture, cheaper to build.
It's certainly
it's
not
way lighter.
in the same
it weighs
way
like
that
2,000 pounds, I think.
But things aren't the same.
No,
way.
less than that. I think 1,700. Depends on the battery, I guess. But
now, where do you see it going? I mean, give us some metrics there.
Yeah, Matt Black is sick.
Yeah,
the coefficient drag is like
some great conversations around how
what is it, 0.13, I think?
Ability to
that's why it looks like that. It's just
shareholders.
complete
and a dividend is a
engineering aerodynamics. That's all that design is
and
for.
If you think about our dividend commitment, it's about $8 billion a year, $1.
1980s cartoon. That's sick.
And that is something that we're very committed to when it comes to share.
Or Lincoln. I've actually cut a beard like Lincoln's.
I think right now
I looked hilarious.
Stock is trading,
it was awesome. I think I did it for Halloween. I was Lincoln.
Yield. And so, you
know, it was crazy how different you can look with just
your prior
beard.
Guest and talking about certain
beard
yields,
change.
And I would say, you know,
yeah, no, they're under 30K. I think the cheapest one. Let's see. I mean, given they haven't come out yet, so they're probably going to raise prices some, but I don't think anywhere near 100,000. Not even for the completely optioned out one.
But really improving the credit quality of that dividend.
Yeah, starting at 25.
That is, look, we delivered $14.1 billion
so $25.90
flow this year. We've guided to at least $16 billion of free cash flow next year.
Yeah, so and a majority of people's commuting is
protection or the downside
I think
risk to that dividend.
What was it? I think a majority of people's commuting is within 30 miles
against our
of their house.
But we're also paying down a significant amount of debt. We paid down about $24 billion.
Yeah, it's less than 30 miles
this year. And we're going to
continue to potentially you'd literally never even charge a thing.
So I think from an investor
even as a daily commuter.
The way we look at it is, look, a yield on a relative basis.
And someone like me that I never drive with my lifestyle right now, so it literally would just have a, you know, the battery would just be brimmed, and that's why I like it to discharge and power the house. And kind of have a balance. You know, keep the battery about 50%, and just use it like a little solar deal.
And always answering all our
I need to talk to them about that because they haven't talked about it doing that.
And until next time, congratulations
but
to you and
that would be hugely beneficial.
There and all the ads. Amir Razwadowski, Senior Vice President, Head of Investor Relations, AT&T. Thank you. Coming up next, we'll talk about shopping trends.
Yeah. So taxi. I mean, even like delivery drivers like DoorDash, Uber Eats, not delivering people as much, but delivering food. It would be, I think, it'd be wildly successful just because it's so efficient. This will be the most efficient way to get around, other than, you know, I guess 2 wheels and bicycling. But if you're in a vehicle, you know, charging from the sun, 40 miles a day just on that. Then yeah, delivering food. Yeah, this one only has 2 seats, so big, huge back area for cargo, but then just 2 seats. They might have a design later on that adds seats in the back, or maybe a single seat in the back, but I'm not sure how the regulations work with that, since it is technically an auto cycle. I think maybe they can only add 1 more seat. I don't think you can have 4 seats, because if you think about like a motorcycle with a sidecar, that's 3 seats. So it might fall in a different classification if you add more than 1 seat. Netflix pop in. How the Ford Lightning sold in 2 weeks, haven't it? Oh yeah, yeah. So the energy density of our battery tech right now is nowhere near what gasoline or diesel will give you. So if you need a lot of energy, then you need gas or diesel still. That's definitely not gonna change until batteries get way more efficient. But for some people, I mean, to me the Ford Lightning, I think that would be perfect, because again, the using it basically as a battery for a house, I would love that. And you compare it, it's cheaper than buying that many Tesla Powerwalls. So I think it's 9 Powerwalls for 1 Ford Lightning, and then you could just have a free truck if you're gonna have backup battery power for a house anyways. And that's why those things sold out like crazy. It's a huge back order and stuff. But yeah, if you're doing heavy towing or long distance towing, it's not the way. You almost sold. You're still holding those, dude? Oh man. What are you waiting for? What are you waiting for?
90 minutes left in the trading day. Let's check it out. So the Dow is about to snap a 3-day winning streak. The S&P is hovering around that 4,000 level. Let's see where it closes. Right now it's at 4,003, down 13 points, but off the earlier lows of the day. The Dow is at 33,645, losing 0.25%, but again, well off the big sell-off that we saw earlier. NASDAQ down 60.
Yeah, if you guys are, I do actually have a referral link on Aptera, I think, somewhere. I don't even know what it does, but if you are interested, use my link.
Senior futures contributor here on the network. Ben, 90 minutes left in the trading day. What are you watching?
Yeah, it's under here.
Well, you pointed it out for the most part, Nicole. I mean, red arrows across the board, all four of the majors.
So I invested in
negative territory.
Aptera.
Fractionally lower though. I saw the SPX down to 39.49 earlier today.
So yeah, use my link under information and welcome.
This morning, back above 4,000.
If you're going to invest or even pre-order.
NASDAQ down to 11,550. The Dow Jones Industrial Average at 33,273, and the Russell bottomed out at 1858. Now, those are new lows for the week, Nicole, but well off the lows from last week. So this is a market that's waiting for more information. The XPX, I've been talking about it for a while, at 39, at 40 even, seems very comfortable at these levels. And I think
they have earnings today after hours.
Recently below 20, and I say comfortable, and you know I say that because we're kind of I say waiting for more information as well, because we're kind of in the middle of this range that we've been in since May.
That same SPY divergence
you've got
still.
the October lows from last
But it's
year,
subtle.
the upper and the lower extreme of that range. We're looking at it right there.
It is subtle.
The bulls have their sights set on that August highs.
If you look at just the price action, it's
data, the
held
Fed
that
possibly
$6
in
level.
the next
Looks
coming
like pretty
days
well.
and weeks to be that catalyst. Hopefully, that's going to take them there.
But it did butt up against this prior support here.
Watching rates really closely.
Yeah, you're gonna have to wait, see if it breaks this resistance and looks good. Otherwise, it could just be rejecting
because an interesting development this week. We saw the TNX taking out that December low. Now, I mentioned in terms of the S&Ps, the SPX comfortable at 39.40. We're holding below the December high, which is up around 41.
You wonder if it's
so
gonna
we're
keep
not
going.
necessarily seeing
Do they have earnings today?
Inverse correlation. Again, yields to the downside. Indices or stocks to the upside. The 30-year did not participate to the downside to the same extent the 10-year yields did. So the 30-year.
Oh, I mean, that's true. They're going to move. Wait, what? Would they?
I just want to point out that
no, they don't do.
We had some interesting developments here today.
I don't know if they're simply to Tesla. You'd have to chart them together and see if it moves with Tesla at all. But if so, then you're relying on Tesla's earnings to be good and rip up for this to move.
I was mentioning a minute ago in terms of what's going to be that catalyst to get stocks above that August high.
If you look back here, though, that support looks like it's bounced off of that. So
I think that could be if we were to get the Fed.
Yeah, I mean the momentum's there, and it is kind of bull flagging.
To raise a quarter only, which is expected.
Not sure if they move with Tesla or not.
They were looking to possibly pause after the next quarter, because that would help the market kind of digest the next 2 rate hikes, but also have something.
Everything's going to move with Tesla probably today, just because their earnings and their huge market cap and swing the market.
Some of the efforts, the heavy lifting that the Fed's been doing in the past is really starting to take grip here. So again, I think the Bank of Canada, if it's a precursor in terms of what the Fed's going to provide us in the coming weeks and coming again next week, basically, then I think that would be important. It could help the market find a bit of a bottom here and potentially mount an attack on that piece and then ultimately that August high.
We need a crystal ball for that to see whether or not they'll give us that indication. Good stuff. Ben Lichtenstein, thank you. Thank you very much. Good to see you. Appreciate it.
I don't know.
Okay, it's time to
Tendy Man Holdings? Oh, Tideman. That was Tendy Man.
Trends 2023. Dollar Tree. Daily Pay commissioned a survey
what is this?
together. And they discuss some of the trends
Wealth management?
that we need to watch. Joining me right now, Stephen Smith, VP of Commercial Operations at Daily Pay.
I don't know.
Great to have you on the show. So they're going to be shopping, but they're going to be penny pinching at the same time?
Yeah, well, first of all, thank you for having me, Nicole.
Tendy Man Holdings, right?
Yeah, there were some really interesting findings.
That would be a nice SPAC.
That we did with Dollar Tree, right? So I think one of the first things that's really important
what do they call those SPACs?
2/3 of Americans plan to spend the same or more on retail purchases this upcoming year, right? So given the uncertainty in the economy, the news we heard from the prior speakers, right, that's a positive sign that we're seeing. And nearly half of those are prioritizing shopping for bargains in store compared to last year, right? So if you think about these two trends together, to your point, we think consumers are going to be shopping smarter and with purpose. And this really becomes a great opportunity for companies like Dollar Tree and Target to capitalize on. So we're seeing some good news in the survey that we did. The third big finding that we found in the survey was that about 3 out of 4
Plan of merger and
consumers,
acquisition is out. I see the forms filed yesterday.
In person this
What are you talking
year,
about?
right? So
I mean, what came out yesterday about their vested stock or something else?
So what does this mean for retailers?
Vested shares?
It's critical that they're going to have engaged and productive employees to interact.
Oh, Avi has earnings.
Right? They're going to have to
prioritize pre-earnings rally.
Investments in the latest technology and solutions to attract and retain top talent.
They already have earnings.
And with job openings remaining tight, this is a challenge. But again, we're seeing very positive uptakes and some very good news for retailers in the upcoming economy based on that survey.
I can't believe it. Every single one of those headlines is like a pow moment.
So this is following a similar trend. They had bankruptcy talks via back in January 20 or January 13.
What? Don't they know people are going to get laid off? Don't they know, you better start saving your money? It might be a recession.
Doesn't have the same move as BBBY, but
majority of people are going to spend the same or more. Were you surprised when you saw that?
Look, I was initially surprised.
Market bounced off that 398.
A bargain, right? They've got to shop. They've got to do things. I think people are looking at the long-term economy, saying, "Look, PPI is coming down, CPI is coming down." In the long term, I think everyone's hoping for a soft landing.
Yeah, it's kind of a bullish candle on GME for the daily.
The Fed does
that holds.
Its pauses, as Ben was talking about prior to this, right? I think consumers are saying, you know what, we're going to get through this. We can spend some money, but they're going to be smart, right? They're going to look for the bargains. They're going to focus on what they need to do. And
Mullen is going.
Luxury things, but I think we're going to again just see.
Are they going to combat illegal short sellers?
I think consumers are very focused on what they want.
I'm glad for folks that they're feeling as optimistic as they are.
Did news come out about their
itself could be a
petition?
Of how our economy will go. If we hit a recession, maybe it'll be very short-lived or mild, because so much of it is the psychology of the consumer.
We hit a recession. What is a recession?
Exactly.
That is related
what are you going to call it?
Product. The other part of it is people are getting out and about.
What is it? What's it going to be?
Shopping in person. I mean, during the pandemic, you had nobody shopping. So now we're up to 3/4 of the people that are going to go out in person.
Still finding paperwork
I hope
filed?
the stores have the items.
Not a hangman bearish pattern?
I can tell you personally, shopping, there's a Target near me, a Dollar Tree near me, a Costco near me.
Hangman?
People are back in person. Shopping is back in vogue. I think people want to be out and about. I mean, travel is obviously up right now. So I think all the signs we're seeing from the survey and the in-person results is that, look, people are going to be out there, they're going to be in stores. So hopefully, the inventory problems are over, the supply chain problems are over. And
if it's at the top of a rally, that's a good point.
I am very optimistic about where we're going to end by the end of the year.
Just that candlestick alone, though, the hammer could be bullish because it's just showing how much pressure there is to the upside. Sellers couldn't keep it down here; it just got pushed up to buyers.
Credit cards, and that is something that has been concerning.
But yeah, if it's at the top of a rally,
folks are using their credit cards more.
This is more like when it's a
that's great. If they feel empowered,
bearish of a reversal, we get a hammer at the top. So yeah, it could be reversal. The fact that it's not really at the top.
That's going to really punch you in the nose.
It's going to hit you. Look, we have seen people using more and more of the credit on their credit cards.
I'll show you what I'm talking about.
Savings rates are going down. So that's why I think, to your point,
it's a pattern though, so it's more than just one.
Target is going to be really important.
Does it have to be inside?
To get more for less, right? And those are the stores that are going to be successful in it. So yeah, it's a risk for the economy.
It maybe has to be an inside body.
Because it is.
I mean, this is just such big chop and stuff. So.
But like I said, people are trying to be smart. They're trying to be better. And, again, I think we're going to get through this on the other side, assuming we navigate the rates in the next couple of months.
And as a retailer,
yeah, that's always at the top.
To have the right employees.
And then the inverted one, of course, would be at the bottom.
And entice customers, right? Tell me a little bit about that.
Yeah, so look, if you're back shopping in person, right, it is super important that you've got, engaged employees, productive employees. Being able to attract them and retain them is incredibly important. I mean, that's one of the reasons that Daily Pay does what we do in providing, on-demand pay solutions, because it really helps retailers keep, more engaged, motivated, and happier employees. But that is going to be what's
like a bullish hammer,
right? Making sure that when you go into that store, there's someone that can help you, that can answer your questions.
So it could just be a sign of a reversal either way.
Find your right electronics. So having a solution.
Now, is GME an uptrend or downtrend on this time frame? I say it's an uptrend, so that would be bearish. But
I was surprised that
that candle alone.
For furniture, 50, 60, 80. I mean, the point is these numbers were pretty good.
Typically, I'd trade that as a bullish candle.
For home goods, for sporting goods,
but I guess it really just depends on.
There didn't seem to be much
the pattern is.
weakness.
That said, this isn't. Yeah, this has just been big chop.
So weak or choppy, that maybe there would have been weakness in things for
potential just consolidation
Well, I think
in
the
this
nuance
large
there
range.
is, they're really
On the
focused
bull
on
flag.
in-store shopping for this, right? In these preferences, I think
Yeah, I mean, the momentum on GME
they really
is
want to buy
it's
these
still
things in-store. They
it's
want
still
to touch them.
quite
They want to
bullish.
feel them. They want to see them.
There's that divergence.
And I think people are focused on durable things. They're looking at things that last.
I closed out of a
It's
lot
less
just
around,
because
instant discretionary purchases that
I
may
opened it
may
for
not
that
last a long time.
rally on
It's really
Tuesday
around the
to
things
start,
that we need. So yeah,
or today to start.
There's a lot of demand that's out there.
So
I mean,
not to say we
people
can't
didn't
just
do a lot
keep
in the last
going up
couple of
some.
years, and I think we're starting to see a refresh on what people want to do in terms of how they want to spend their money. And I think they're spending on money on things that are important to them in the lifestyle that they want to live.
Am I back up at the SPY?
Anything, Stephen, is the final
Yeah,
thought
GME's moving
here,
up a little bit here.
With Daily Pay. I know you did this one in collaboration with Dollar General, but Dollar Tree. But the point is, over time, give me any sort of perspective and your
Wicks on
takeaway
chart lines?
from this time that we're in now,
like trend lines?
versus any other time.
It depends.
That,
like this one.
You sort of say, wow,
This one I'm using Wicks just because it's on dailies. But
Well,
I try and do bodies.
The 2008, 2009
to me, that
time period
just shows
when spending
more
really came to a stop in many ways, right?
a better-
I think we're in a different position now, right? People have more savings.
more
that they're drawing
conviction
upon.
on that
I think
price.
they're smarter about spending. They have more options.
Oh,
I
GME
think
moving
people have
up.
better visibility
Actually, that's
now
high of the
going from
day.
What may happen in inflation, right? At least
Look
we
at
don't
that.
have a
Yeah,
perfect crystal ball.
GME new high.
We have a more history to draw upon and sort of see what's happening there.
Mullen's still
I think
going.
people are just feeling more confident.
There must be news on that.
Like I said earlier,
short
job
seller
openings
battle.
remain at an all-time high, right? Our job openings remain steady, 10.5 million. So people are saying, look, there's jobs out there. If I want to switch, I can do that. I think they're feeling a confidence that they can spend the money, that they can do things, and that, if they're impacted by a layoff, they can go find something else out there. I think they have belief in the American economy, and I think that's what we're seeing here.
It really is a fascinating survey. I'm glad that we had the time to sort of go through all of it. The Harris Poll survey from Daily Pay and Dollar Tree. Yep. Stephen Smith, thank you.
This RSI divergence is a little bit more pronounced. In this one, I am using the wick. So I use the wicks for the RSI divergences.
Texas Instruments, the earnings, our panelists.
I guess so. They show up more. I'm not sure. I'm not sure why I just use the wicks. If it's a body RSI divergence, that's probably just a stronger signal. Like on SPY here, this is a good example of one. That was a body up there, not just a wick. Here to here. But see, it wasn't that much higher. It's not like a huge divergence, just real subtle. The RSI was pretty large, but the price wasn't much. Whereas here, the price is more, but the RSI is not much. And then GME on this one, RSI is more, and the price is a lot. So it's a pretty big one, but again, that's a wick. So on the body, there's not actually divergence, just on that wick. Netflix high of yesterday. Yeah, man, market did not care about letting that sell-off continue. Huge reversal. $37 likes. Thank you, guys. Thanks, Ryan. Appreciate it, man. Or no thank you, because that means I'm failing at promoting myself. Yeah. I know, I was messing around. No, I appreciate it. Thank you. Yeah, you're competing with the world, so you can find great stuff. But as far as the pool of media, it's everything. So GME kind of right at the high from open. If you compare it to SPY, how much SPY has outpaced it. This whole move GME hasn't gotten. This would fill the gap on GME if it did this. Which it might just be lagging. We've got 10 minutes till CNS closes. See what happens. Not sure the volume on GME today. It was pretty good. Yeah, it was better than yesterday. Not than the day before though. Yeah, I have ads on the videos. So I can run ads on the stream. I just it's not like a lot of viewers for it to really matter. All right, there goes GME. That's a new high, filling that gap.
Recovery that'll allow for revenue to reaccelerate that can help offset some of those margin pressures.
And your target, by the way, Josh, 175, is that right?
That's correct. Yeah, we took it up. The semiconductor index is ripped year to date, and we took up the target appropriately.
Okay, understood. Yeah, we've seen a few of the places upping targets, and at least
Killer
you
those
are
ads.
seeing some saving grace there in autos, for example, while there's more concern on things like consumer PC and smartphones. Brian, where do you see it going in a year or two? Is Texas Instruments, because we can't say semis are all
I mean, the
semis.
volume
Each one
4x.
has its own pros and cons. I mean, where does it stand in the competitive landscape?
Sure. So within analog, we think of it as a bellwether and really
That's a good point.
best of breed in terms of management.
Yeah, that's probably
operating
true.
Margins, gross margins, them and ADI really at the top of the pack. But as Josh mentioned, there's a
GME
lot
might
of
fill this gap.
different
Might
end
be
markets that they sell
lagging
into. So
SPY a bit.
the chips going into PCs, smartphones, that has been weak for a couple quarters and will be weak for a few more. Industrial was strong for most of 2022. We're seeing that weakness now in the start of 2023, particularly in that sort of heavy machinery equipment. Automotive has been the most resilient because obviously we've been in a shortage over the past couple of years. It seems like that shortage is potentially winding down. Now, we like TI because they have that diversification across all of the end markets. You're not exposed to just PCs or just smartphones like an Intel or a Qualcomm. So we really think of the business as best of breed for that reason and a good place to relatively hide in the sector.
Right, understood. So automotive seems to be the saving grace at this moment, and you mentioned the resiliency there. Josh, when we look at the PC, smartphone, I mean,
Cosmo.
the anticipation is that there's going
This
to
has
be
been a
some
weak
weakness
breakout.
in the next few quarters.
Broke the level, test VWAP.
Forever?
Pretty
I mean,
mellow.
is it going to be, what about the next year? What about the next 5 years?
No, that's a key debate in the industry, and you saw PCs and smartphones in particular weaken very sharply
looks
over
like
the
a nice
summer
chart.
before auto and industrial. And the debate is, are we close to exiting that downturn, and is sell in getting closer to sell through? I think we have another couple quarters there, but on the flip side, consumer and PC also has potential to turn around more quickly before industrial, which went into the weakness a little bit later.
2.2 to 4 volume pre-split.
We were just talking about the analog side of this and the best in breed. Brian, you were saying, what about gaming? What about what's going on?
No, we were getting
in
like
China
1 million pre-split and less than 1 million.
That they're really looking to grab. Tell me about that, Brian.
Sure. Gaming isn't a huge piece of this business, so you're not getting nearly the same exposure, for better or worse.
I mean, the chart adjusts.
NVIDIA, which is actually,
so, like, my Webull chart adjusts for the split, the volume. So if you want to see, like, this is all adjusted.
You don't have that sort of exposure. So again, it's a good place to hide there. In terms of U.S. China,
like the volume,
there's certainly concern about
the volume's picked up actually since
for
earnings.
Taiwan Semi as the leading fab for all
But
sorts
this is
of chip
all
makers.
split
You know,
adjusted.
for Texas Instruments, they control a lot of their
Even
own
from before the
manufacturing,
split.
not all of it. But there's certainly the indirect effects. If you think about an iPhone as an example, it doesn't matter how many chips TI has on hand or what their inventory looks like. If Apple can't get its processors, they're not making iPhones, and TI is not selling those chips.
Yeah,
No matter
SPY's
what.
moving
So
back up here.
U.S.-China, I think, continues to
Back up for a
be a
retest of that
headwind or
400.
a concern for any investor in semiconductors. I think there's a low probability, but of something pretty pretty scary if things were to get worse, or things were to get really bad, I should say.
I see. Josh, same question. I mean, your thoughts about the China relationship for many of these semis and also in the world of gaming. I mean, are there certain names that chip makers that you do like more than others?
Yeah, so again, similar to what Brian said, my colleague Matt Ramsey covers NVIDIA, AMD, which are more exposed to gaming acutely.
Right.
TI has with the
4
analog
times.
more exposure to consumer electronics than some of the others with higher auto
Right.
exposure. But again, it's not necessarily explicitly related to gaming. The bigger concern we have with China is we've heard of business disruptions, potentially just slower industrial activity as related to the COVID-19 reopening and disruptions of business there. TI didn't say it was a material issue from our conversations with them yesterday, but it's certainly something to watch this earnings season.
Yeah, Brian Colello and Josh Buchalter, thank you both very, very much. Wonderful to see you both. Thank you. Big time to have you on. Really appreciate it. That's going to do it for us here on the watch list. Thanks for joining me. I'm Nicole Petalides every single weekday here 11 a.m. and 2 p.m. Eastern Time. Keep it right here. Market on.
Shoot, I was muted. I was just talking about these futures contracts. So I opened a long VIX and a long ES, and you see the correlation. Like, it's interesting. The VIX has not moved as much as the ES to the downside. So I was wondering, because the buying power effect is the same. At this point, it doesn't seem like it makes sense to do VIX futures, unless if when ES is coming down, VIX to the upside outpaces it. But so far, ES to the long side is outpacing VIX to the short side, basically. You see what I mean? Which is kind of strange. But I'm gonna watch it when I'll leave it there and just see what happens when we have kind of a down day. See if it makes more sense then. Yeah, the volume has been waning. That's true since the split, and really since, I mean, you can see it on the chart. I think that could be somewhat attributable to people DRSing. So this pinch right here looks like it's been coming down basically since then. But yeah, I mean, that's the last time we really had a pinch. And every time that's happened, the volume it comes down between those pinches, but yeah, I mean, we're due for volume, we're due for a pop. Maybe I should listen to myself and go back long, but I don't know, I want more confirmation. But I could be wrong. If SPY starts ripping again, Yeah, I'll probably flip back long and be happy about it. Did I lose VWAP again? Gambling on Tesla. I took a short on LVS. I bought a put on LVS. That's the only earnings I'm playing. It's going great. That's a huge rip actually. I haven't played earnings at all. I guess I'm bearish on Tesla because I have a short on SPY, but not because I'm bearish on Tesla earnings. Type like a monkey. Oh, character limit. Fixed based on option trades on the SPY. Why this move isn't because of options trade, but because of the market moving due to shares being bought. Interesting thought. I mean, the VIX is, it's weird. It's move. Maybe it's just these futures, how they move. No, I mean, it's pretty much inverse. If you look, like, this is today on the VIX futures contract. So it went up this morning when SPY was going down, and then the rest of the day it's been going down, basically perfectly inversing SPY here. But as far as the futures contracts, I think maybe the tick value and all that, because it's a little different. It's not just like stock. So maybe the tick value, you're not getting the same dollar for dollar as you would just playing the short on the ES. I don't know why my VIX is only down $100. Unless I'm just not reading this right. Oh yeah, that's my VIX only down 100, but my ES is up almost 800. Oh, what? Thank you, Brad. Good day to you too. I appreciate it, sir.
We're going to talk big picture, though, on the economy as well. We can't lose sight of what's happening in the inflation fight by the Fed and the actual numbers, for which we will get an update on Friday. We'll get another look at the Fed's preferred gauge of inflation. We'll talk about the direction for the central bank with Cullen Roche here at the top of the show. Right now, bonds are pretty quiet.
Good data Friday?
Very comfortable. Around 3.5%. The 10-year is like pinned there. Kind of the same way that the stock
Netflix just ripping
is pinned at 4,000, but it is certainly worth noting that peace in the bond market is probably really just the main.
Oh yeah, fully filled that gap, huh?
For stock bulls in
Just
general
broke
over
it.
the last year, they just want to see a calming bond market. So maybe that's it. Notice today that yields were down. These are the 10-year futures we're looking at, /10Y. This morning, yields dropped as Microsoft was under pressure. So there is still some evidence if you really squint.
Stops updating the ticker.
And look carefully.
The Fidelity app looks pretty nice though. That updated one.
There is plenty of evidence over the last 2 months.
Much better than their desktop.
When there are moments of fear.
Dude, SPY new high, really? Yep, new high. 40.35 or 435.
Seen strength in the Treasury auctions.
This is that next level I had on it.
So there is a little bit of
Where is it?
Bias into
40.39.
Negative
The 40.38, 40.39, and it broke 40.43, 443.
Stalemate. The 10
Holy crap!
Trying to push lower, it seems, in its own stalemate at 3.5. So while there are signs that there's recession concern out there, and that investors have been buying bonds when data's been bad and when stocks have been bad, we have seen that.
495. Oh my gosh, this is wild.
At the end of the day, the big picture still looks like stocks prefer yields to
Market's pricing in a good Tesla earning, I would say.
And that the relationship generally of last year is still probably
so even if it is good,
relationship,
they might have a dump from it.
That stocks for the most
That's not going crazy today, though.
Inversely to yields in the dollar. Now, again, there's a possibility where if it really looks like the economy is going to hell in a handbasket, investors could buy bonds, push down yield while stocks are down too. But as we're seeing, stocks just don't really want to stay down right now. Microsoft turning positive as we speak. Look at Bitcoin. What did I say here? Here goes Bitcoin now, trying to claw back some losses there as well. I would argue actually the most convincing thing in today's market is actually what's happening in some of the financials connected to consumer activity and credit. There goes Microsoft positive. Banks are doing all right today.
Microsoft's green.
Capital One has had a big turnaround. So value companies are generally doing better today. But particularly interesting is this big rally in Capital One, which was down in the first response on earnings as charge-offs soared from a year ago. But keep in mind, so did their revenue.
Kind of a pre-earnings run-up usually.
Financial. These charts for
SLGG on the top.
Here are basically a middle
Big
finger
pop on
to
SLGG.
the notion that there is going to be a major buckling of consumers under credit.
Similar chart to a lot of them that have made moves.
That's the only way I know how to describe it. PG-13 rating on the show today, okay? I think we can handle it. But seriously, that is a really big move because Discover and Capital One both dropped as soon as the numbers came out.
What's he talking about?
Investors said, hold on, that's a lot of credit risk. And then as the day went on, they processed and they bought the stock. So those are pretty big deals. That's a pretty big deal. Those are pretty big moves. I think those are the most important moves here, maybe of all the earnings that we've seen thus far. Because if there is a major risk in the economy, the one that I can see that seems obvious is indebted individuals and American spenders who blew a lot of money that they had during COVID, especially over the last quarter traveling with egregious inflationary prices. We didn't want to sacrifice our lifestyle. So to me, that's been the biggest economic risk, that investors and consumers would hit a wall. But apparently the market is happy with what Capital One and Discover, the highest risk credit-connected companies, are telling us. And that is pretty optimistic. Let's bring in Kevin Hanks and Renita Young, talk some more about our session. Quite a back and forth here today, guys. Kev, start us off with just the trading action. I mean, I don't know, I don't want to overplay this, but it's now 3 days where the market seems comfortable at this long-term resistance. We're buying Microsoft dips. We're buying Bitcoin dips. This kind of looks like conviction to me.
Well, Oliver, it's early in earnings season, but the price action with Boeing and Microsoft today really point to a market that's been able to take a pretty good body punch and recover. Now, remember, it's a long battle to get through earnings season, so there might be some more body punches, but it might not be from Tesla. That might be a reason why the market firmed up here. Listen, I think Tesla's going to
new high on the SPY.
Has a chance to put up a pretty interesting, forward look at the market. Why? Remember, they just cut prices, so even if they miss on their numbers or come slightly poor on their numbers, they're going to probably talk about a really strong first quarter based on these price cuts. And why did Elon Musk cut these prices?
Jeez, man.
To get under the $55,000 threshold so the government subsidies can kick in. That might be an interesting story in Tesla. Now, the market
I've heard about
overall,
that.
Another strong bond auction, Oliver, has bonds drifting lower. I see the U.S. dollar is down again. So people are getting more and more comfortable with the dire projections for Q4.
There's an RSI divergence here on the dollar.
In line, not any worse. So I think you've got some serious dip on here. Microsoft and Boeing. Number one and number two example of that.
This is a
not really worse than expectations.
Could be a big bull trap.
Really
I don't know.
Better either. So hitting right now where the estimates
intraday
are,
moves,
if
though,
that's
are
enough,
wild.
that's certainly a
I'm just
pretty
completely flat pretty much yesterday to this.
To your point, Tesla,
gap down,
I think the cut
big
for the
drop,
prices
and then
really
just
can only be interpreted
huge
as
Nike check
softening
mark.
demand. If you feel you need to make them available to the tax credits, then that is reflecting a certain strength of the consumer, I think. We've also got a bunch of data the next 2 days. Kev, give me one more thought here on the macro before we talk about some of these companies, because we've got GDP, We've got inflation Friday.
Yeah.
Can that get in the way of this type of stock-specific strength, or has the market been past the inflation worries for the better part of this year?
First look at GDP tomorrow morning, Oliver. Expected to go. Remember, this is the first look at fourth quarter. Expected to go
as far as
from
numbers and expectations, I haven't looked at their
2.7%.
expectations or anything.
Durable goods. We'll get a look at the U.S. consumer, not only from the durable goods data, but from MasterCard, Visa, and American Express.
The lowering of the prices is good, but that won't be reflected on this earnings.
That's a big look at the U.S. economy and the consumer. Remember, durable goods are those long, bigger items.
I can't imagine earnings are going to stay good.
Then you'll get your
with anything
look
that's
on Friday, Oliver,
exuberant expense, like a car, like a new car,
that's what everyone's
an expensive
waiting for,
car, like a Tesla. If that's
0.5%,
priced in already, I don't know, and if that's
if we get those, the market will
if that's
like the
already going to be seen on this earnings.
My fears: when does inflation start?
It's all about expectations versus what comes out, I guess. So I'm not very bullish on really any earnings.
All right, so
at this
with
point.
these comebacks in Microsoft,
Maybe some value I would be,
we've
or
talked
things that
about
would do
this.
good in
Let's be
recessions,
fair to the Bears,
like
let's
a
talk
Dollar
about
Tree,
why the market isn't blasting off right now, because there
Walmart.
is a few. There's a batch of important companies that are still lower.
Things that are
there's quite a bit of red on the
that are
screen
cheap
today.
for consumers
we talked
to
Intuitive Surgical
use.
this morning. Numbers didn't live up to expectations there. We talked some of the tech iffiness, but there's actually two names that I think are very cyclical, tied into the economy, that are important. ADP, which does payrolls, and then Norfolk Southern, which is trains. I mean, these are pretty important companies that are really dragging today.
You guys listen to 311?
Especially, well, they're both really important. Let's start with ADP first. Now, automated data processing shares are lower despite an earnings beat. The best reason why I can even see looking out on why this stock is lower is because the tech sector took a beating today after Microsoft came in with those mixed earnings earlier. And so we'll see if that reverses, since now Microsoft turned positive and the tech sector
I'm not doing cover calls at BBY.
But let's take a look at ADP's numbers. Earnings per share increased to $1.96.
Should have bought these calls this morning, though, 51%.
A year ago. Revenue grew 9% to $4.4 billion, and it's just above that consensus estimate from Zacks of $4.38 billion.
That's not terrible.
No, it's not terrible. And the company reiterated their revenue guidance for the full year for $17.8 billion to $17.9 billion.
Okay, so maybe the street here is looking for something a little bit more than just confirmation. Maybe they wanted a boost. A lot of layoffs. That's not good for ADP.
No, it's not a lot. I'm so sorry. Excuse me. It's not a good thing, and that's something that people be look out. But remember, it does HR solutions.
Coming back down a bit.
Processes payroll, administers benefits.
Is it over? I don't know.
Even more for a reason why that would hit this company even worse.
Yeah, this is a really interesting one, because over the last year it's done great, but now I think with some of these layoffs now spreading,
Mullen held up well.
Concern here, because it's a uniquely tight rope that the market is giving ADP, not giving them the same forgiveness as some of these other companies. Norfolk Southern down 5%. Ahead of CSX this afternoon.
Now, this company reported an earnings miss and also reported that the board approved an increase in the quarterly dividend. So not sure how that works out, but maybe they're trying to make shareholders happy. It sounds like it. But the company also announced that one of its board members, who is also a former CEO, James Squires, he will not stand for re-election. Let's take a look at those numbers. Earnings per share was $3.42. It missed the analyst consensus of $3.44. Railway operating grew 13% year over year to $3.24 billion. That was above the $3.2 billion consensus. And merchandise revenue increased 12% to $1.8 billion. And so the board did approve that 9% increase in the quarterly dividend. It'll be payable on February 21st to shareholders of record on February 3rd.
All right. Both these earnings have plenty good in them. They're just not good enough, it seems, where the market now is also kind of preferring some of the tech stuff and companies that did all right, because both these shares did all right over the last year. A little favoritism shift perhaps here. It's early. We'll see if it keeps it up. Thanks for the breakdown on the numbers. Appreciate it, Renita Young, Kevin Hanks. All right, let's talk some macro. Let's talk about the Fed before we get into Tesla earnings, because the rest of the show is basically Tesla. Colin Roche joins us, CIO at Discipline Funds. Who better to take the helm on the macro for us this afternoon? Stock market looks kind of convinced here, Colin, that the main threat of the Fed and inflation is past us. Did the data tell us that's the case?
Yeah, I mean, the market is getting this right, and I think that, I called this was going to be the year of disinflation in my full year outlook, and I think that the market has that 100% right. The interesting thing going forward, and especially for the Fed, is so as we start to see this, falling rate of positive inflation, what we call disinflation, is there more downside risk there? So what the equity market is going to start to grapple with as the year goes on is, okay, lower inflation is obviously good, and that increases the odds of the Fed reducing rates potentially at some point, or at least not being more aggressive. That's the thing I think the Fed is, or the market is really optimistic about. But the bigger question is there more downside risk potentially as we head into the latter part of the year? And especially given that my forecast, at least for the end of year core PCE, is going to be somewhere around 3%, which is still way above the Fed's target rate of 2%. So the question is the Fed's going to move to 5, I think. They're going to move 5% on the overnight rate, and I think they're just going to pin it there. They're going to wait basically probably the entire year to see how the inflation story actually plays out. And so the somewhat disconcerting thing with what's going on is that the Fed's going to move to 5. Core PCE is going to moderate all year, but it's probably not going to moderate as fast as they are comfortable with, which means they're going to remain pretty tight all year long.
Now, remain tight, does that mean like the minimal hikes, or does that just mean no cuts?
I think that they're going to take the overnight rate to 5, and they're going to just stop cutting there. So they're going to, kind of wait and see mode at that point, and then they can kind of digest the data as it comes in. If I'm wrong and inflation, stays high or starts to pick up, well, then the equity market has this completely wrong. The Fed's going to get much more aggressive, and that's sort of a bad story for everything, because that means that mortgage rates are going to jump up to 7% plus or so. Inflation lingers, and the equity market is going to be caught flat-footed. But to me, I think the bigger risk is actually to the downside. I think that, I loved what you were talking about earlier with Capital One and the risk to household credit and whatnot, that we're seeing this in a lot of things like the bank lending surveys, and this is just sort of classic credit cycle development, where you get a jump in inflation, consumers start borrowing more and more to maintain that living standard, and as inflation starts to fall and the economy slows, coincidentally, you get a kind of a drop off in credit, and lending standards start to jack up, and you get kind of the worst of all worlds there, where the credit markets tighten a lot, consumers weaken, they can't borrow as much, and so you kind of find yourself in a situation where, credit markets need to, they're kind of a one-way train. They need to kind of keep growing to kind of, keep being able to feed the beast. And there's a risk going into the back half of the year, and especially next year, that we're going to find ourselves in this sort of Wile E. Coyote situation where the consumer is out over the cliff, and they don't have their footing.
It does seem like there's a lot of good logic behind that, based on the inflationary dynamics, the spending dynamics from the last 4 months. But then the market loves these Capital One and Discover earnings, and I believe that's credit spreads behind you, if I'm not mistaken. Do they look alarming, or is that market also fairly calm when you look at corporate bonds right now?
Yeah, good eye. It's pretty calm right now. So, the big sort of like credit risk environment is not my base case, but I would argue that that sort of an environment is, if you have to pick an asymmetric risk that is much more probable. I mean, my base case is really sort of a muddle through this year. Nothing really crazy happens, and the Fed just sort of sits tight. But if you held a gun to my head and asked me what the asymmetric risk is, I would say that the risk of deflation going into the latter half of the year is higher than, say, the risk of like a 1970 style runaway inflation, where we see like a consistent sort of like 7, 8, 9% CPI consistently. So, and that's an environment where the equity market is going to eventually have to come to grips with the fact that there's going to be companies that fail. There are going to be
I'm more
consumers that fail.
deflationary
And,
than
the mortgage market
disinflation.
is very healthy compared to anything that we saw in 2008. So we're not likely to see anything quite like that. But I don't know. It's disconcerting in the sense that, especially if you start to see this decline, kind of spread out into contagion into not just corporate credit, but things like the household or the housing market and the consumer credit market, where you can kind of get enough of a ripple effect there where this turns into something that is, at least maybe not a 2008, but much more worrisome than the Fed probably expects it to be.
Yeah, Colin, one of the things that you're thinking about in that context from an investing standpoint, I saw in your outlook for the year, right after that potential risk of disinflation and economic risk, is a chart that actually comes from Cliff Asness at AQR that looks at growth value ratios. And it seems like his point, and it would be implied that you agree, that maybe some of the growth bubble still has left to pop. Can you give me your thoughts on this chart in about 60 seconds?
Sure, yeah. I mean, it's a great analogy with, what happened in the last sort of, I think, 2 years is in so many ways analogous to what happened in the late 90s, where you had this sort of just crazy speculative fervor that wasn't based on a lot of fundamentals. And so, going back and looking at that chart, you can see that the last time we were even near this was back in the late 90s. And so, to me, the future will never look exactly like the past, but if you had to ask me of a recession or a slowdown period that looked like the most analogous to what we're going through now, where corporate credit was probably like a bigger risk and just sort of the air coming out of a really big, long speculative fervor, well, the 2001, 2002 downturn looks like the right analogy, where maybe you don't get anything that's really crashy and like panicky, but you get this sort of just slow grind, either sideways or lower, that is just painful in a very, very different way than 2008 was.
All right. Pretty wild chart to think that maybe we haven't even scratched the surface. And I guess one way to keep drilling down into that would be to slow down the economy and disinflate.
Could be something more like this.
That's not immediate.
2001 dot-com bubble.
Maybe the Fed's not upset with a very moderate decline in asset prices.
I want to see this
over the course of a
triple
multi-year
bottom.
period. It'll be no fun for for every one of us, but
RSI divergence here.
Plus your long value, short
volume
growth.
picking up.
Yeah, I mean, in the long run, none of this is a big deal. So, we talk about all this stuff every day and what the stock market does on a, minute by minute or monthly basis. But in reality, in the long run, I know a lot of this stuff is painful in the short term, but in the long run, it'll all play out.
Yeah, it eventually, on a long enough time horizon. Colin Roche, appreciate you as always. Love your take. Thank you very much.
Thank you, Oliver. Happy New Year, everybody.
Discipline Funds. Happy New Year, Colin. Appreciate it. All right, let's talk some Tesla when we come back. Ross Gerber's on deck. Stick around. Time to talk earnings.
If you look at the time frame there, it's been more volatile, and I think you get more volatility just with how markets are traded now. But 55 bars on the weekly chart from top to where we are right now. Compared to, that was 110 bars, so another year, halfway through it, potentially. Yeah, if it is a 2001 type deal, but markets do move faster now. Okay. Yeah, that was interesting. I was enjoying listening to that guy. Good perspective. So I guess it's up to Tesla earnings after hours. I'll probably be watching it. And I've held for this whole move from here to here. So I don't know what point would I say I just cut losses. But I think I'm gonna hold it. This longer term trend, I think I should be right. And with how big the moves are, Unless if we actually break out and keep going, that would be the only thing that sucks. But so far, it looks just like still trading in a range with chop, but then going down, I would say. Oh, I got some HLBZ stocks. 20% minus. Oh, you're down 20%? I mean, you kind of have to have a plan. I say that, and I never do it either, but I mean, I like this one. I like this space, this micromobility, e-micromobility. So this is one I would be fine holding. Oh yeah, it just depends on how long you'd be willing to hold it. I don't think it's over. This whole move was just on them announcing that they're attacking shorts, basically illegal shorts. They haven't implemented any of the strategies to do that yet. So I think once they actually start executing on those, you know, whatever it is, either the dividend or spinoff, or you know how far they get down there, I think you could definitely see a proper short squeeze on this one also. So how long that takes, I'm not sure. Did they hire, or are they using that company? Yeah, CEO. So I mean, CEOs are going to want to jump on it also, of course, because it caused their stock to rally. So just have to see like what ones are legit or not. What was the name of that company that basically looks at their stocks? Anyways, if they hired them, then they're somewhat serious. And I think that takes 30 to 60, maybe 90 days before they have that data. So could be, you know, it could be a couple months at least before a big move. Jeez, this is going slow. I'm reporting that bot. So slow. I can hold forever. I probably just want to know your opinion. Yeah, I mean, it helps if you're gonna hold for a long time, if you have some desire to hold it in a long term, if you like the company or use it or think it'll be here in 5 or 10 years. Like if you can have those behind your investment, then you know you don't have to look at the price. You just, if it's cheap, buy more. But if it's strictly a trade, you don't know anything about it, then yeah. All right, it's 3:28. I need to do the video. Thank you guys for your likes. I appreciate it. There's 40 of them. Word, appreciate it. And for your subscriptions and all the nice things. Yeah, I'm gonna recap some of this price action, some of the TA and my positions on the video in about 45 minutes. Sub up, like up, comment down. Happy money sticks around. Hit the notification bell so you know when that video goes live. Thanks, guys. See you on the video or on Discord. Peace out. Thanks, Ryan.